Be happy not because everything is good, but because you see good in everything. Rise and shine and be on your way. Good morning and bonjour. I, CHR Misha, welcome you all the panelists and participants today to the first webinar of CMIB Committee on Real Estate Sector. Under the aegis of CA Durgesh Kabra sir, this committee will strive at its best to do its to betterment for the members. So we are fortunate enough to have the presence of CA Durgesh Kabra sir, chairman of CMIB committee with us. He is in his second term of Central Council in ICAI, and he has also served as the chairman of WIRC of ICAI. He believes that leadership is not about titles, positions, or flowcharts. It is about one life influencing another, helping one another. And with this mission, our chairman, sir, runs the committee. So I request him to give a welcome address and opening remarks for our participants. Over to you, sir.
Thank you, Charmi. It's indeed a pleasure for me to go ahead with the first webinar on the real estate sector in the Committee for Members in Industry and Business. I welcome all the participants and two panelists today here. Vimal Punamiyaji, a very learned and very senior chartered accountant, expert of the tax in Mumbai, and CA Pankaj Jainji for this first webinar of CMIB in the real estate sector. Friends, let me tell you that the CMIB is a non-standing committee of the ICAI, which is involved into the various activities related to the members in industry. Normally, we have a lot of things to do for the members in practice, but this is one dedicated committee for the members in industry and business, where we are striving to give our best to the members in industry in form of various industry-specific webinars and seminars, conferences, leadership summit, and the awards. There are two awards. One is 40 under 40 award, and the another award is the ICAI award, which is for the CFO, CEO, and Hall of Fame award, which is being given for the extraordinary contribution into the industry and business by the chartered accountants. Last year only we have started 40 under 40 award, which is the award where we are recognizing the contribution of 40 young chartered accountants who are under the age of 40 across the country, who have given fantastic contribution to the growth of their organization where they are working. So they can be the brand ambassador for the Institute of Chartered Accountant of India. Besides these two major activities, the most important and the very big activity of the CMIB is campus placement program for newly qualified chartered accountant. We do it twice in a year, and approximately more than 10,000 chartered accountants who are freshly qualified or newly qualified, they participate into it. Last year, in the last campus, which is known as 57th campus program, 189 companies have participated, which is ever highest in the history of the CMIB. And more than 10,000 chartered accountants, fresh chartered accountants participate into the campus, of which around 6,000 chartered accountants have accepted the offer. Offers were given to more, but accepted offer was more approximately 6,000 chartered accountants. We also do the career accent program for the experienced chartered accountant. Also, a chartered accountant is having the experience, or she's having the experience of more than 1 year. We are having once in a year the career accent program also, which is known as a placement program for the experienced chartered accountant. We do have the placement programs for women chartered accountant. That is also on flexi hour basis, and we had last year campus first time, and this we would be doing again placement programs for them in this year also. We also had the overseas placement program, and this year also we are going to have the overseas placement program. Beside this, there is a mentorship program, mentor-mentee. This portal is there, and on that, mentors can register and can do the mentorship for others who really want guidance from them. So these are the various things where I think the CMIB is doing various activities and trying to be in touch with all the members in industry and business. Besides this, there are more than 100 study circles of industry members who are also there into the various different industry. We have the power CPE study circle, we have the infrastructure CPE study circle, we have banking CPE study circle, we have NBFC CPE study circle, and not only in one city. If there are number of NBFCs in Mumbai, number of NBFCs in Delhi, then the multiple study circles are also there in the same subject at different locations, where the members working into that particular kind of industry or service can get the benefit out of it and can interact for the benefit of the organization, their organizations. This time we have thought of having 2 webinars every month on the topic of the interest of the members in industry. And we started with the real estate industry, where Vimalji will be dealing with the direct tax and Pankajji will be dealing with the various opportunities and intricacies in the real estate sectors for the chartered accountant friends. So I think this is a beginning where the chartered accountants will get a knowledge about the intricacies in the direct and indirect tax, as well as the opportunities available and the other intricacies of the real estate sector industry, that how one should deal, where Pankajji will be guiding. I think there is a regulator also with respect to the real estate industry, which is known as RERA, and which is again different state-wise. So Pankajji would be dealing with the RERA also to some extent. And I believe that these kind of webinars and seminars will benefit immensely to our members in industry and business, and will help them. We would be very happy to receive suggestions from all of you that how we can remain connected with members in industry and business, and what more can be done for the members in industry and business. We are open to it. Please feel free to write to cmib@ici.in. So if any good suggestions which is practical enough, which can be done for the benefit of the members in industry and business, we would be welcoming those suggestions, and we will try to put into the actions all those suggestions which we receive. Thank you very much. I welcome you once again to this webinar, which is first webinar of this season. We were not doing earlier these kind of webinars, but I thought that the members in industry and business are also required to be updated on the various nuances into the various topics which are related to them. So we have started this series known as the members in industry into the different areas. With this, I thank you all for sparing your time to be part of this webinar on this Saturday morning at 11 o'clock. Thank you very much. Over to Charan.
Thank you, sir. Sir, you established trust with candor, transparency, and credit. Saying thank you will be not enough to capture the gratitude in your heart towards our members. A big thank you for all the things that you strive for members in industry. Thank you, sir. Moving ahead, in India, the real estate sector is the second highest employment generator after the agriculture sector. So real estate sector in India is expected to reach $1 trillion in market size by 2030 and up to $200 billion in 2021. So by 2025, it will contribute 13% to the country's GDP. So rapid urbanization in the country is pushing the growth of real estate more than 70 to 75% of India's GDP, and will be contributed by urban areas by 2030. With this background, CMIB committee has come up with a webinar on real estate. Before starting the session, I request all the participants to post their queries in the query box, which will be taken up by our speakers at the end of the session. To begin with the session, we have our first speaker, CA Vimal Punamya sir, will throw light on introduction and trends in real estate investment. To formally introduce him, CA Vimal Punamya had secured 22nd rank in Inter CA and 35th rank in the final CA. His practicing chartered accountants from last 48 years as proprietor of Messrs. Vimal Punamya and Company. He is a member of Standing Committee of TDS appointed by Income Tax Department and Honorable Patron of Estate Agent Association of India, Federation of Accommodation Industry of India, and has written number of books on transfer of flat, stamp duty, registration, capital gain, search, seizure, survey, HUF, family arrangements, NRI provision, etc. He has published various articles of public interest in various newspapers and magazines. In the past, he was a president of All India Business Council and has visited US in 97 as a legal advisor to exhibition India Property 97 as a key speaker of various seminars chaired by High Commission of India in USA held at Chicago, Boston, Dallas, and Los Angeles. With this brief introduction, I welcome Vimal Punamya sir and request to share his insights over the topic. Over to you, sir.
Thank you, madam. My friend Durgesh ji Kabra, Pankaj ji Jain, Mukesh ji Ladda, Nishi Agarwal, and of course, Charming for her kind words. Friend, topic allotted to me is introduction and trend in real estate investment. Now, what is the future of real estate investment? So let us understand what is the background. Here, let me tell you, somewhere in 1901, research was made for Bombay, because I am from Bombay, so I'll give you more examples for Bombay that apply to all over India. That time in Mumbai, one bungalow was available at the rate of 25 paisa per square feet. So in short, by paying 250 rupees, we could buy a bungalow of 1000 square feet. At that time, they predicted that by 1905, price will be 1 rupee per square feet. 1910, it will be 10 rupee. By 20, it will be 20 rupee. By 1950, it will be 50 rupee. 1970, it will be 80 rupee. 1980, it will be roughly 1000 rupee. 2000, it will be 10,000 rupee. Particularly in South Mumbai, I am talking about. With 1901, only South Mumbai was there. And they predicted by 2010, price was 30,000 rupee, which I have seen from 1980 to 2023. What prediction they made, I'm witness to that. They predicted by 2020, price will be 1 lakh rupee per square feet, which I've seen, which is there even as of today. They also predicted in Mumbai, in South Mumbai, price by 2030 will be 10 lakh rupee per square feet. In 2050, it will be 1 crore rupee per square feet. So in 2050, if I have a flat of 1000 square feet, in South Mumbai, it will be worth 1000 crore. So that is the future. And whenever the price goes up, everything goes up, various rules, regulation come in the picture, income tax department is active, and various things place. So let us come, if I want to invest, when I want to see future of the real estate, land is limited. So future is definitely very good future. But point is, when I want to decide, when I want to invest in the future, in a real estate, I am supposed to know little bit of 92 Act. Out of that, few are Contract Act, Stamp Duty Act, Registration Act, Transfer of Property Act, Local Municipal Corporation Law, and various things. So if I have little bit knowledge of that, then I can take a decision what will be the various stages. Now today what happened, after partition in 1947, before partition, particularly in Mumbai, what I could see was, one person used to purchase the plot, construct himself, stay in the top floor, ground floor he used to have a shop, and in between he used to keep a tenant. So he can have a fixed income of by tenancy. And that was going on and on. But after partition, From Pakistan, when Ishwardas Bhatia came to Mumbai, and he started concept of cooperative society, which is very popular all over India, particularly in Metro, Bombay, Delhi, Calcutta, Madras, Bangalore. Society concept is very, very popular. Nobody have bungalow, or have only few persons have bungalow, which is purchased long back, or very rich person can afford. So what happened in those days? Builder used to form the society first. Few members will become member of the society. They give contact to somebody. They buy the land, give contact to somebody else. That person will construct the building, present shareholder. They will allot the flat, and remaining flat they will sell and take care of everything. So then what happened when builder lobby have come in the picture? They thought, why we form the society? So somewhere in 1965, builder started purchasing the property. They will use to buy the land. After purchase of the land, they will construct the building. They will sell to the prospective buyer. And after sale to the prospective buyer, they will form a cooperative society. It can be housing society, it was bungalow society, it was plot society, it is a premises society, and various type of society were formed. Society used to manage that thing. And after managing by the society, we used to contribute some amount as a society charges. And things were going on and on. So the same system, concept of cooperative society came in the picture. After that, somewhere in 1980, when land value has gone up like anything, so builder have to invest heavy amount in the real land. And then concept of joint ownership have come. Joint development have come. So somebody will contribute the land, builder will invest the money, he will construct the building, and he will sell. And instead of giving money to the landlord as a principal amount, as a cost in the beginning, he will give certain percentage of the flat to the landlord, or some money and a flat, or some money was when there was an income tax complication, which Pankaj Bhai will deal with that. So that time, if person is liable to pay tax first, then he has not received any money. He has simply given his land to the developer. So they used to take some part of the money also to take care of the income tax. But after that, some amendment have come, which Pankaj Bhai will deal. So I will not deal with that. So now, when joint development concept have come, that has become very, very popular. So builder party only to construct and hand over partly to the landlord, and remaining the sale and make the profit. And what is the benefit for landlord? If he sell in the beginning, he get a particular amount. Now later on, what will have? He will get a area in the project constructed. So he will have more profit, more whatever price goes up in last 5-10 years when building is under construction, he can take also benefit of the debt. Then that things were going on, and in particularly in Pune, I have read in detail, there was a Magarpatta area. Now what happened in the Magarpatta area? There were 300 farmers. They had a land that was near Pune, and they have contributed the land to a company or to a partnership firm or company. They formed various type of 2-3 combination, and instead of taking the money, they become shareholder of the company. After shareholder, they constructed number of buildings, maybe 30-40 buildings. Half was the residential, half was the commercial. Residential portion they sold and received the money. That money was used for the purpose of construction. And commercial property was given on a rent to the various IT companies. And end of that, what happened? Person who sold the agricultural land in 1990, that time the land was valued at 20 lakh or 30 lakh or 40 lakh or 50 lakh. But they have not taken that 50 lakh. Now every year they are getting dividend of 2.5 crore to 3 crore rupee per annum. They were also allotted bungalow, 3-bedroom, 4-bedroom, depending upon the person to person and what their land quantity they were holding. And accordingly, it was become very popular. And now surrounding the Pune, at least there are 10 proposals on the model of the Magarpatta. So now new concept have come about the Magarpatta, and that development was going on. That was going separately. So no contribution of the land. Builder simply invest the money, construction cost. He is expert, because in Bombay particularly, if somebody want to construct the building, he need 35 approval from the government. Which recently, many things have been simplified, but still it is very complicated. Ordinary person cannot construct the building in Bombay. They have to go number of areas. Number of approvals are required from government, municipal corporation, and particularly police department, fire brigade department, electric, water, lift. There are hundreds of departments are there. 35 approvals are required actually to construct the building in Bombay. So builders have become expert of that. Landlord contribute the land, building is constructed, they get their area, builder get their profit, flat owner get their purchases, and meantime revaluation goes up, So nobody is bothered about anything, is something here and there. Now, recently, new concept have started, that redevelopment of the property. Earlier when the joint development. Now redevelopment means building which is already developed, that building goes under redevelopment. And particularly, I will giving example Bombay. In Bombay, at least there are 20,000 buildings are there, which is nearly 80 years plus old. And they all require redevelopment. Under the redevelopment, what happened? Every monsoon, for example, 10, 15 building falls, 50 or 100% dies, and government become very active. And now recently, government is really seriously very active for last 10 years, and number of benefits has been given for the purpose of redevelopment. And whenever, so what happened? Today, I'm a owner of a flat of 1,000 square feet. During redevelopment, I get 1,300, 1,400, 1,500. I also get alternate accommodation for the 3 year or 4 year when building is under construction. And meantime, builder pay me rent. Builder also give me hardship allowance. They get lot of money as a corpus to the society. And various provisions of income tax also play a role. Under redevelopment, win-win situation is, for example, building originally owned by some landlord, and there was a tenant, and tenant was paying monthly rent of 10 rupee or 50 rupee or 100 rupee to the landlord, and building was not maintained because landlord was not in a position to maintain by paying 100 rupee rent or whatever, and that building go under redevelopment. They have already used substantial FSI. For example, a particular plot, one can construct 10,000 square feet FSI. Now 30,000 you already used, so no potential was there. So those buildings were not developed earlier. But now government saying whatever tenants are there, they can construct that much plus 3 times more than that. So they can take care of the construction cost and also give more area to the tenant. Even tenant occupying 100 square feet, he will get minimum 400 square feet. So various benefits are there. So redevelopment scheme is going on very well for last few years in Mumbai. And of course, definitely big cities like Hyderabad or Delhi, Madras, Bangalore, Calcutta, there also many old buildings are there. So those state government also must have taken some benefit. But as far as income tax is concerned, all are exempted under section 54 or 54F, or various deductions are there under which no tax is payable. And I will not touch those because Pankaj Bhai will deal with that. Now question comes, what is the future? Because we are concerned just now, but what I told you in that 15 minutes is the background of the real estate. How things have moved from 1901 up to 2020. Now, what is the future? Now, friends, future, let us say I want to buy a property, commercial or residential. I need lakhs of rupees. Even Bombay, you need few crores of rupees to purchase the property. After that, and my whole idea is to either stay there or have my office there, or investment purpose, in future I can sell, I can make more money. Now, if you invest my whole money in one property and tomorrow the particular area, some litigation is there, government want to acquire something, or there may be some more complication. So my whole money has been invested in one property. So new concept have come now, real estate investment fund. Now, what is the real estate investment fund? Real estate investment fund was very popular for last more than 50 years in USA, Australia, and various Japan and various other part of the world. India may it has become popular after 2007 onwards. When SEBI recognized this fund, then SEBI came with more guideline in 2014, and of course 2020 further guideline have come. So under that guideline, this fund, even I have capital of money of 50,000 in my bank account. No, I cannot buy anything in 50,000, but I can invest to this fund, so I can have certain area. And I have fixed income also that. And government have lot of regulation on that. If whatever real estate fund invest the money, 90% of their income, they have to declare as a dividend. 80% of their fund has to be invested in the real estate in such a way that their potential is very good and they're readily available for the use, and income will start immediately. 10% they can invest only under construction. They have to make 2 times NAV of these funds twice in a year. So you know where it is going or how it is going. And fund must have minimum capital of 500 crore rupees. So accordingly, substantial amount can be invested. So many person can invest say 50,000, 50 lakh, 2 lakh, 5 lakh, 10 lakh. But company finally must have worth more than 500 crore. So some promoter will come, they will invest the money, and then they will buy the property. 70-80% investment is already by the promoter. then we can contribute our part, and accordingly the return can start. And normally past we have seen the return is from 10% to 20%, which is reasonable as compared to the bank. And it is one type of a mutual fund of the real estate. So, and because of government restriction, they cannot misuse also. But of course, we have to see before we invest, who is the promoter, what is their background, whether the background is there or not there. And in this way, what happens normally when I purchase the property, even assuming I have 5 crore rupees, I buy one flat and one office for investment purpose. I already have my own residence. Then what happens? Liquidity is not fast. If I need some money for my daughter's wedding or son's education or my own purposes or some medical purpose, then I have no liquidity. But in these funds, what certificate you get, they are liquidable. You can sell immediately in the market. It is not like a share certificate, but something like that only, and it can be sold also in the market. A small investment amount can be invested because in buying the property, we need substantial money. And security is also there. Both, for example, one fund invest in 10 properties. 2 may appreciate like anything. 2 may depreciate. 3 may be average. So overall average, there will be security will be there. Because if we put all egg in one basket and there is some problem, then everything will be lost. So some security type of is there. A trust company they purchase big area, develop, and they sell. So beginning where their profit may be less, but later on when they sell, profit will be more. And they normally purchase the land, or they may also have a joint co-ownership, or they can enter into redevelopment. So land cost also will be not there. In similar way, if I want to buy a big complex, then I cannot purchase. So this fund can purchase. Similar way, there are fund for the venture fund. Venture fund means for example, some builder have already started construction. He completed 70-80% work. After that, he has not no money. So mutual fund will make a proper agreement and further invest. So building is viable and goods can be sold. So their return can be more also. So here one type of fund, mutual fund is also there. Similar way, nowadays this fund also construct a home for the senior citizens. So that is a future potential for senior citizens, because what happened today, majority of the rich family, a lot of family disputes are going on internally. And sufferer is only the person who is the head of the family, who is the oldest in the family, because he already distributed a lot of wealth. And we know many examples has happened in Singhania family and many other, which I will not bother just now. So senior citizens, what they want, after my life is practically, say I become 70-year-old, 80-year-old, I want to leave everything. I want to pray for the God or want to have a healthy life. And I don't want to stay with a family which have 30%. I want to go separate. And that they go to a senior citizen home. They stay there. Good facilities are also provided, depending upon person to person. It varies from 5,000 per month to 50,000 per month. So those homes also can be constructed and senior citizen can be accommodated there, and return will come, which can go to the investor directly. Similar way, nowadays students are also going from one place to another place. Many students go outside India, and their concept is there about the student's home, because they have sometimes sharing one room they take on hire, share many by many person. Sometimes they take only one table space, or sometimes various type of things are there. So that is also become now popular in our country, because like Kota, Pune, Bangalore, they are the various educational hub, and many students go there. And first problem will come where I will stay. So for that purpose, they can construct apartment and give to the student the one table, one palang, common bathroom or single bathroom, depending upon the area to area and rate to rate. So that is another future potential for the future in this area. Rent apartment for young working person. Many person go on the job. Young person working in TV serial or many other places. They go to a lawyer firm. They go to come to Bombay or go to Delhi or Madras or Bangalore, and they can't afford to take a whole flat on a rent. So for them, for their purpose also, they share the apartment or to take one small area, either as a paying guest or take on a rent and share by 2-3 person. Now even Supreme Court has allowed different type of boy and girl also can stay together. So that way they can stay together, separate, whatever depend. So that is also future area which was not there for senior citizens, for students, for working person. And another, for example, somebody wants to construct a mall or want to construct a hotel or want to construct a seminar hall. And it is not possible for one person. Tomorrow it may run, it may not run. So what happened? They start a fund and many person purchase the share and they do activity there and we share the profit. Indirectly, even by investing 50,000 rupee, I am a co-owner of a cinema theater or a 5-star hotel or some mall or some conference hall. So that way also, that is another future of the area. So future I can see in real estate, in the funds only, real estate investment fund, venture fund, and future money will go like this. For example, I go to Delhi and I want to stay there for 2 months. Now, why take apartment, a complete flat for rent on 2 months? I can stay in this type of apartments, which is no less than hotel, but more than the hostel. So accordingly, this type of future area is very, very popular, will become popular. Another important thing to, now here what happened, I'm buying a mutual fund. But I also always advise to all the person, at least you must have one house of your own on ownership basis. Why that is important? India, what happened? Even when I came to Mumbai, I went to my hometown after 2 years. My father and my all family member asked me only one question. Rehta kidhar hai? Kiraye ka makan hai ki ghar ka makan hai? So India mein there is some sentimental value. I must have house of my own. And now it has become more important because if I have a house of my own, I have paid the stamp duty as per the state law. I registered the document under Registration Act. Then I am a clear-cut owner of that particular house. And for example, I have one son and one daughter. Both are outside India. Nobody bothered about me. And I have retired. I become, for example, 75 plus or 80. And I have no source of income. I'm not well also. Then there is a concept, government came with a scheme, reverse mortgage. So so that also become very, very popular in future now. So the awareness is not there much. But let us assume that I have no money. And I don't want to sell my flat also because I want to stay there. After my death, my wife will stay there. So what I can do? I can make a reverse mortgage of that house. I can go to the nationalized bank, give document of this paper. Bank will verify 2 things. What is the market value of the asset? Number 1, whether I paid the stamp duty on that or not. Number 2. Number 3, whether my documents are registered, whether my title is clear, whether I have not mortgage anywhere else. And bank, after valuing the property, valuation of that property, looking to my age, if I want to reverse mortgage jointly with my wife, then my wife's age, looking to all the factors, bank will decide every month they will give me 50,000 rupee or 1 lakh rupee, depending on value of the property. Every month, money will be credited to my bank account. I don't have to pay back in my lifetime. After me, if I have taken that type of mortgage, where after my death, my wife will get, or after her death, I will get, let us say property in her name. So after her death, I will get. So depend upon what type of scheme I am using. And then I will, every month I will get say 1 lakh of rupee or 50,000 rupee as value of the property. After my death, my wife will go on getting. After both we expired, then meantime, bank will later take a letter from me or some document from me. After my death, how bank will proceed. So I will give name of my son and daughter. So bank will contact my son and daughter. Your father have mortgaged this property with us, reverse mortgage. Your mother also passed away. Your father passed away. We have given this much money. Along with the interest, our amount outstanding is, say, let us say 1 crore rupee. If you pay this 1 crore, we will release property in your name as per instruction of your father. Now, if my children say, no, we are not interested in paying 1 crore, then bank will auction the property. Let us remember the bank collect 2 crore rupee on sale of that property. 1 crore they will adjust against that. Whatever expenses they incurred for sale of the property, brokerage, etc., they did that. And remaining amount they will give to my children as per directions given by me. Or if I given a direction, do the charity, then bank will give to the trust as per my directions. Let us assume that my loan is 1 crore and they are able to sell the property only for 80 lakh rupee. So the 20,000 rupee, 20 lakh rupee, what loss they have made, that government of India will give to the bank. So the reverse mortgage scheme also has become very, very important. So at least we must have one property on ownership basis in our name, where all title is clear, stamp duty is paid, and registration also is over. Similar way, many times government acquired the property. Now earlier, up to 2013 law was, if whenever government acquired the property, I was liable to pay capital gain tax based on the amount what I received every year. But now that amount is 100% tax free. After any property acquired by government, whether central government or state government or municipal corporation, any government body for the public purposes, then after 1st January 2014, I'm not liable to pay any income tax. 100% it is a free from the income tax. Similar way, agricultural land also I will point out here, because reinvestment may many person buy the agricultural land, so they can have income from the agriculture. And agricultural land in few states, only those person can purchase who is an agriculturalist. Either his father or grandfather was doing agriculture. And because main attraction is that income tax, also agriculture income is not there. Now, in case I sell my agricultural land, earlier law was, if I sell my agricultural land and my land situated 8 kilometers from municipal corporation and population of that village was less than 10,000, there was no tax. But now this definition has been extended further. That part is there. 8 kilometers, 10,000, that is there. But now municipal corporations are expanding like anything. Like Delhi, it run into hundreds of kilometers. Bombay, it goes from Bombay to Kasara Ghat, I think more than 200 kilometers or maybe 180 kilometers. So because of expansion, all villages are merged in the city and municipal corporation. So in that situation, now what is the amendment is there in agricultural land is, if land is situated 2 kilometers from the municipal corporation and area is more than 10,000 of the municipal corporation, not of the village, and up to 1 lakh, then no tax is there. If land is situated within 2 kilometers, then I have to pay income tax on that. Similar way, if population of municipal corporation is between 1 lakh to 10 lakh and land is situated beyond 2 kilometers, but before 6 kilometers, then it will be taxable. Otherwise, it is exempted. And if land is situated beyond 6 kilometers and within 8 kilometers and population is even more than 10,000, 10 lakh, then also it will, beyond 6 kilometers exempted, within 6 kilometers, it will be taxable. Now here, another important thing, what I'm thinking is, real estate investment trust is the future of our country. For as far as real estate is concerned. Now let us know a little bit about those, what are these trusts and how they act and how I told you, they are very popular in Western European countries. India, they have recognized in 2007. Otherwise, illegally, they were going on even before 2007. Somebody will book the flat with the builder, give the money, building take off, then they will make the agreement and the things were going on. But now it is, and then again, you depend upon builder to builder, property to property, investor to investor. But now the funds are controlled by SEBI. So there is a proper regulation. SEBI recognized in 2007. Again, further amendment have come in 2014. And in 2020, after COVID, further guidelines has been given. So they try to make secure as far as possible. Still, I advise you, whenever you invest, must see the promoter, who is the promoter of the fund. And then only start the investment. Now, what is the main benefit of the fund? Liquidity. A small amount I can invest. It is secured because they are going to invest in various areas. Return is normally 10 to 20%. Followed in the two types of investment. One is the equity investment. Second is a mortgage investment. So a small amount, we have to go for equity only. We get the dividend. And bigger amount, it is a mortgage system. Many hospitals, schools, apartment, sometimes they own that. And after ownership, they made the income. And accordingly, after they distribute the money. Fund is not liable to pay the tax. Whatever money we get from that, we have to pay tax on that item. They depend upon our slab. So, but recently in past few years, another thing is started. One co-living, few persons come together and stay. And they always prefer to stay in the building owned by some apartment. For example, I go to Delhi for 15 days. Then I don't, so I will book no, I can't afford to say my hotel. I will stay in apartment. And that is done by some trust. And accordingly, money has been distributed. And somebody contributed even 20,000 rupees. He get proportion income of that. So a small amount also can be invested in real estate. The co-working is another concept of come. For example, when I started practice, what are the options? Either I take office on a rent or I purchase outright. A new concept have come. For example, I work from home. For only for 2 hours, I come near income tax office. So I need office only for 2 hours. So I can take a cabin or table space or common area only for 2 hours. And whenever my client come, I can take on hire conference room. So that type of business centers are also there everywhere in Mumbai. And they are all near government offices. So that new concept will come, and that also fund can take care of those. And those chartered accountant who don't want to buy a full-fledged office, they're working from home, or they don't need office, they need, now let us say doctor who come only for consultation for a particular place from 2 to 4. 4 to 6, he go to another hospital, another place. 6 to 8, he go to third place. So he need only for 2 hours. So why he pay rent for 24 months, 24 hours? He will take only for 2 hours. So that way, and after 2 hours, somebody else will take that. If doctor needs some conference room, that is also available. He needs some Xerox copy, that is also available. He need a cup of tea, that is also available, and only the center will charge. So it is one type of co-sharing the area. And co-sharing, the co-living also is very, very popular now. Supreme Court also recognized that. So friends, in this way, future of Bombay is, so here let me tell you few important question answers which will make more clear how we proceed further. Let us see only first real estate investment trust. What are the main point? How does a company qualify for REIT? If they commit, the 90% of the investment will be made only in the property which is ready to earn the income, and 10% will be earned under the under construction. So risk is very limited, and accordingly, fund, I told you, fund 500 crore, then only the trust can be registered there. Then what are the REIT in India? India, as on today, there are very few trusts, maybe 5 to 10, which is very popular because 500 capital also is required. One originally in 2007 itself, no, there is one person called Anand Jain who's working with Reliance. He started one trust and taken number of development project in Mumbai. So very no, but this is the future of India where this trust will be very, very popular. What is the equity REIT? We invest in equity fund. What is the mortgage? We invest in the mortgage property fund. What are the public non-traded? So they are trusts are not quoted in Bombay Stock Exchange, but they are tradable. But it is not like you can sell share, Reliance, tell the broker and sell it. It is not like that also. But in future, that will become like that only. Who invest? Anyone can invest, any irrespective of any amount. Then co-working mein, I will tell you a few questions. What is the co-living space in India? Means few persons come together. Co-living space in India means a cluster of apartment where common shared, one room is shared by say 2 persons. Can unmarried couple stay? Yes, Supreme Court have recognized boy and girl can also stay together. Is co-living cheaper? Yes, expenditure will be less. If I take a flat on a rent, I have to pay rent of 30, 40, 50,000 rupees. Now here, if I take this area, this will cost me 10,000 rupees. So yes, there is saving. I can take for 20 days. I can take for 10 days. I can take for 40 days. Once I take a rent apartment, the other person may say, I will not give you less than 6 months or less than 12 months. So that, of course, gap is there. And normally expenditure is 10,000. It is in future, it is really very good idea. In case I go to London, I don't want to take a flat on rent. I can take a third apartment or this co-ownership co-system and I can stay there. When my work is over, I can come back to India. Whatever number, like it is a small hotel type of thing. So friends, this is the future of India. I personally feel that future of India lie in this various type of trust only, and redevelopment, old building, because potential wherever land is available, building is already constructed. Normally we are converting agricultural land into non-agricultural land and converting, so that land which will be available, but then agricultural land will be less in that situation. So old building only redevelopment, and particularly in Maharashtra, government has given number of benefits. So many the benefits are increasing. Because I will not tell you those sections of the government of Maharashtra, local law of municipal corporation, so they not be relevant at present because we are talking on India basis. But even I'm holding 80 square feet, I get under the redevelopment 400. And if builder construct and give me 400, he can construct another 1200. So he can take care of his profit, he can take care of his cost, and everything is there. And under redevelopment, I told you, builder give corpus, hardship allowance, rent, various amenities. In lighter sense, I will give an example, and then I will conclude because my time is up to 12. There's a big building in a Bandra which go under redevelopment. Originally, 1965, flats were allotted by MADA Government of Maharashtra, some body is there. And they paid 4,500 rupees per flat, 1965. 1,500 was paid on down payment and 3,000 was to be given in 100 rupee equal yearly installment and 30,000 mein 3,000 were paid without interest. So every person by 1995 flat was free because we already paid 3,000, already paid originally 1,500. So total cost of flat was 4,500 rupees. Somewhere in 2015, one builder of Mumbai, Kalpatru Builders, have taken that project for redevelopment. And under redevelopment, each flat owner was given 1,450 square feet area, where price as on today is 1 lakh rupee per square feet. So everyone got flat worth 15 crore rupee. Plus he has given 2 crore rupee as a hardship allowance. And as per that law, it was exempted in income tax also. Every month, 1 lakh rupee was given as a rent when building was under construction for 3 years. And accordingly, those persons who paid the rent outside, they have spent the money more or less depending upon their requirement. And those persons who already have another house somewhere, they have saved that. And they have also recently temporarily decided some cases that amount is also not taxable, but that clarification has come now, so many persons have paid the taxes. Now what happened meantime? So person who paid 4,500 for the flat, that too in installment, got nearly 20 crore rupees, 15 crore plus 2 crore plus the rent of nearly 50-60 lakh. So worthily 17.5 crore rupee got against the investment of 4,500. Now question came, meantime Bombay increased the FSI. So again, those persons have approached the builder. Earlier when you given the project, FSI was say for example 3. Now FSI because of cluster development and this development is a 4. So builder has given 20 flat of 15 crore each to the society free. And also paid to the society nearly 100 crore rupee by way of a corpus amount. So society can invest in the bank, earn the interest. So those persons who are paying earlier maintenance of 100 rupee, 200 rupee, now they have to pay maintenance of 10,000 rupee because there will be many lift, garden, swimming pool, health club. So expenditure definitely will go up. So by investing 100 crore rupee, they can take care of that. And whatever new flats are sold, old flats, builder has given 100 crore. Wherever new flats are sold, each flat owner have contributed some fund to the society. So that comes with the old par with the old. So that was the beauty of the redevelopment. Before I end, let me give you another example. There's a building called in Wadli, also similar build project was there. That also given by MADA only. One builder came into redevelopment. And under redevelopment, each person was given flat of 600 rupees square feet. Because 400 to minimum. That depend upon your area, what area you are having. And then builder give more than that. So there also, builder is given free flat, hardship allowance, rent, modular amenities. You simply go, everything was there. TV, fridge, furniture, modular kitchen, everything. Only they have to enter with 2 dress of the clothes. But one boy went to the builder. He said, sir, my father passed away. My mother passed away. You have given me flat of 700 square feet or 600 square feet. You also given me a car. You have given me jewelry of 250 grams for my wife. You have given me this, you have given me that. But I am not married. So kindly get me married also. And builder say, okay, I will get you married also. You sign the development agreement. So much potential is there in redevelopment and future of the trust also. Thank you very much.
Sir, we have questions coming up for you. Can I read it for you?
Yes, sure.
With Gujarat Legal Authority judgment, is it crystal clear now that GST is liable only on the construction cost of existing and free area offered to members in redevelopment society properties?
Madam, GST better you ask the person who handles the GST. Okay. Anything connected with income tax or this, you can ask me.
Okay, sir. The next question is if the property is not acquired under Right of Fair Compensation Act, whether it is taxable?
If acquired by the government under, normally government will acquire under this act only. This is a complete section 96 section. Section 96 with all field definition is there. So it will be exempted. If recently one of my client's case, municipal corporation acquired the land for the public purposes for making a garden. And they have allotted me TDR. My client sold those TDR to outside. It was treated as exempted. Of course, the litigation ITO create always some complication here and there, but finally up to terminal stage we succeed.
Thank you, sir. And then next question is developing agricultural land into plot is fully exempt from GST and applicability of 44 AD. And what is the turnover in completion method or work progress method?
Madam, here what will a very important thing. GST, of course, I will not reply, but as for project completion method and percentage completion method, I will just tell you, builder had two systems of accounting. Either he can follow project completion method when project is completed, offer profit for the purpose of tax, or percentage that, for example, 10% have come together. No, they don't know each other. Somebody is architect, somebody is advocate, somebody contributed land, somebody given a money, and some builder is constructing. So today profit is there, everyone will distribute. Tomorrow they may not pay the tax. So main builder what he want, he'll let every year pay the tax and then person distribute the money. So actually what happened, our Institute of Chartered Accountants came with the accounting standard, and that time ITO have not understood properly, and they created a lot of complications. Now under accounting standard 7 or 9, a person cannot follow now project completion method. Every year they have to show certain percentage. So then matter went up to High Court. High Court said Institute can give guidelines as far as accounts is concerned, how income tax is to be levied. For that purpose, Income Tax Act is there. And Income Tax Act recognize both the thing, percentage as well as project completion, both the percentage. Then, so that issue was settled. Then Income Tax Department came with their own accounting system, ICDS. And ICDS 3 deal with the, again, with the builder and construction and development. So there also, again, question came, okay, now builder cannot follow project completion method. Many representations are made. And finally, courts have also decided now that ICDS is applicable only to the contractor and not to the developer or builder. Further, income tax, so but ITO are not accepting that. So Central Board of Direct Taxes has withdrawn ICDS 3, which were dealing with the project completion method or percentage completion method, and they said whatever followed in the past can continue till Income Tax Department come with new ICDS. So they came with the ICDS in 2016. It was withdrawn in 2017 with retrospective effect. Now up to 2023, nothing have come. So as on today, I can say with the confidence, if whenever some real estate transactions are involved, whether buy a big plot and divide in a small plot, or convert agricultural land into the normal non-agricultural land and then sell the plot, conversion from agriculture to non-agriculture, up to that point of time, no tax, provided we fulfill the 4-5 conditions which I told you. But after that, it will be normal profit. Normal profit, you can follow project completion method or percentage completion method. But here, let me add one thing. 1% done that only, purchase the big land, agricultural land, convert it to non-agricultural land, divided into number of plot, sold, say, let us say 100 plot he divided. He sold 50 plot. So up to conversion date, it was exempted. After that, he paid a tax on the business income because it was a business venture. Meantime, that person expired. So his wife inherited remaining 50 plot. So wife was not a builder. So her work was not to divide the plot and sell. She was inherited. So in her case, it was taken as a capital gain. In case of husband 50 plot, it was the business income. Agriculture to non-agriculture transfer up to that point of time, no tax. Madam, can't hear.
Charmi, please unmute yourself.
Charmi, you are on mute.
Sorry, sir. Sorry.
Ah,
The next question is surrender of tenancy liable to capital gain tax? And if no cost was paid, can 2001 valuation be submitted if capital gain tax is required to pay?
Madam, up to 1994, in the view of the BC Srinivasan Setty's case, 128 ITR, page number 214, if there is no cost, no gain. So tenancy was not liable to tax up to 1994. In 1994, law was amended and tenancy become capital asset and it is liable to tax. Up to 1999, Bombay, when you sell the tenancy, you are not allowed to take the profit also. You have to sell, only 3 months rent deposit was there. But after that, Government of Maharashtra abolished Bombay Rent Act, came with the Maharashtra Rent Control Act, and now they can officially take the money. And after 1994, it is taxable. As cost is 0, you can't substitute 2001 value and take the indexation. You cannot do that. But in case there is a cost, many times person have given some deposit of 5,000, 10,000, 20,000, whatever figure. To that extent, you can't substitute the value of 2001, but whatever your cost, indexation of that amount can be claimed. So the original principle of BC Srinivasan Setty's case was there, followed by Bombay High Court in Pandol case, and there are many other cases. But point was there, in 5 cases, even there is no cost, you are liable to pay the tax, goodwill, tenancy right, road permit, loom permit, and painting, etc. So except this 5 head of income, it was exempted. It is exempted even today. But in this Finance Bill 2023, law is amended again. If anything is not covered in those areas, everything will be taxable. So there now a lot of litigation will take place and law will decide what happened. So as on today, we can say after the amendment, everything is taxable, specifically something is exempted. So tenancy right is taxable. Of course, long-term, short-term, you have to see if tenancy is more than 2 years old, then of course long-term. So 20% plus surcharge, 15% plus execution cess. And if it is short-term, then normal rate of income.
Okay, sir.
Thank
Thank you so much, sir. Thank you. Thank you doesn't even begin to cover how grateful the committee is for you to share your knowledge and insights. Then to thank you so much for sharing your knowledge and insights with us. Thank you so much, sir.
Thank you, madam. Thank you very much.
So our next speaker is CA Pankaj Jain, sir. To formally introduce him, he is a managing partner of SBP and Associates, having offices at Marine Lines and Nariman Point, Mumbai. He has cleared his CA in 2002 and DISA in 2006, with LLB in 2010. His core area of practice is direct tax, and he loves sharing knowledge. He has co-authored a book on charitable trust published by JCAF. And with this brief introduction, I request Pankaj sir to throw some light on the topic recent amendments in taxation. Over to you, sir.
Thank you, Charmi, for the brief introduction. Charmi, I would request you to kindly enable the screen share. So I want to share my presentation with the participants. Or probably Nishi?
Yes, sir. The tech team will help you on this.
Yeah. So Punmya sir has taken us to a different level of imagination and our future, I could say, the development which is expected in real estate. And I can definitely say that with Punmya sir experience and exposure to the real estate sector in last 40-50 years, his predictions will come true. So it was a great and thrilling session listening to Punmya sir as to how bull market, the real estate would be in a bull position. I would take a little detour or deviation from here, and I would like to introduce some of the provisions under the Income Tax Act, which I would not really say that are really, really very worrisome. But if they are not considered in the real sense, or it has not been planned out properly, it can create a huge tax liability. And therefore, for all of us, it is very important to understand this. Some of the recent amendments, which has created many technical intricacies, which one need to know to really appreciate and understand the implication. So still it is not enabled anyways. So as has been mentioned by the earlier speaker and while introducing the topic, definitely real estate sector is one of the most leading sector in the economy, and which is touching almost to all aspects of the economy. It's one of the biggest employment generator, and that is the reason almost all the regulatory agencies here or there tries to control or tries to impose some or other law or control, because of it's been affecting almost all the common people in India. And since the revenue involved here is substantially huge, and the developers have been making huge profits, even the tax department, including the GST and income tax department, are also after the real estate sector to ensure that the appropriate taxes are paid well in time, which leads to many litigation. Because of litigation, various amendments, again amendments lead to more litigation. So it's a never-ending cycle. So in today's session, I have taken up 3 important amendments which has been made in the recent past to discuss. So in the time span of 45-60 minutes, I think I should be able to complete 3 important amendments. So the amendment number 1, which I would like to discuss, is regarding the annual value of stock in trade. This issue has been very much debated in the past, and almost kind of settled down by an amendment in 2018 by Finance Act, wherein it has been stated that a stock in trade would also be subject to the annual value but though it was not in that sense, but yes, that was an indirect meaning which has been interpreted, and the department has now started using this section to actually tax the annual value of the vacant property lying with the developer as stock in trade. The second important amendment which I'm going to discuss is conversion of a stock in trade to capital asset. We have discussed many a times, and we have practically used the provision of section 45, wherein a capital asset is converted to stock in trade. This is the situation where it's a reverse situation. Stock in trade is converted to capital asset, and what are the unintended consequences which will arise because of this, we have to discuss. And third discussion is regarding project completion and percentage completion, which Bimal sir has very well explained. So I will just take it forward with some more specific provisions and specific example on the same line. So let me check my. Nishi, I am not able to share the screen. Can you help me with that, please? Chalo. So let's start our discussion till the time the tech team is resolving the issue. So as I have discussed, there was an amendment by Finance Act 2017 with effect from assessment year 2018-2019, wherein with the intention to help the real estate sector, and it was termed as a beneficial provision, they have come out with an amendment stating that if a stock in trade is held in the form of building or a land appurtenant thereto, then originally it was 1 year, subsequently it's amended to 2 years. So for the period of 2 years from the end of the year in which the completion certificate is received, the annual value of such stock in trade would be considered as nil. Okay. So by implication, the interpretation which we all have made, or especially the department has made, is that for first 2 years it is nil, and third year onwards it would be taxable at the annual value. So, and also the FM in his speech has very categorically provided that this has been introduced to resolve the complication, or to resolve the issue of notional rental income chargeable in the tax of builder. So there is no doubt that, and even the explanatory memorandum which was given along with this amendment has very categorically mentioned in essence that this is nothing but a beneficial provision. As we all know, sorry, I'm still unable to share the screen, but nevertheless, as you all know, originally this Delhi High Court came out in the case of Ansal Housing in 2013, a decision wherein it held that the taxability under the house property is based on the ownership of the property. So if you are the owner of the property, then you are subjected to the annual value, even though you are holding it as a stock in trade. The argument of the SSC was that once I held it as a stock in trade, it becomes my business asset, or it is for the purpose of business, which is outside the purview of section 22. This argument was rejected. Another argument which was taken up by the SSC in that case was that, okay, then I should be entitled for a vacancy allowance because the property remained vacant throughout the year, because I could not let out the property. If I let out the property, I will not be able to sell the property. So there was a business compulsion on me to not let out the property, and therefore I should be entitled to claim vacancy allowance. Even this argument was rejected by Delhi High Court by relying on Andhra Pradesh High Court decision in the case of Vivek Jain. So the Delhi High Court held that even the stock in trade would be subject to annual value, and that created a hell lot of difficulty for most of the developers, because during the period of slowdown, and even in the normal case, it is not possible for any builder to sell all the house property or all the properties till the year it receives the completion certificate. So if any house property remains, or any property for that matter remains after the receipt of completion certificate, it was subject to annual value. It was subject to the notional rental being taxed. Subsequent to this decision, now this is interesting to note, subsequent to the decision of Ansal Housing, there was a decision of Supreme Court in the case of Chennai Properties and Investment, wherein the Supreme Court has held that the SEC was predominantly involved in leasing or renting out of the property, and therefore that would become a business income, even though the SSC is the owner of the property, but Section 22 would not be levied or would not be attracted. So this decision in a way has again given a ray of hope to the SSCs that yes, we can always say that if it is for the purpose of business or it is the business activity, then again ownership is not only a criteria to tax the notional income under Section 22. So just for the sake of clarity, if you are covered under Section 22, then it is not necessary that you should actually earn the rent, because there is a concept of annual value, which means that the potential of that property to earn rent is sufficient for taxability. So that potential is computed, and that amount, even though you are not received, becomes taxable. But if you are covered as a business activity, that activity is covered as a business activity, you go under Section 28. And under Section 28, it is only when the actual amount is received, it becomes taxable. So there cannot be a notional computation that you have not received any amount, still you are paying tax, or if you have received X amount, but the notional value is Y or the annual value is Y, you will be taxed Y. So that is a big difference between Section 22 and Section 28. Now, coming back to this Chennai properties decision, I'm sorry I'm not able to share the presentation, but please bear with me till that time, and we will have to focus a bit more to understand what I'm trying to mention here. So this Chennai property decision came subsequent to the first decision of unsold property. The same case of unsold property on the same issue came before the Delhi High Court somewhere in 2018. And this decision of Supreme Court was quoted before the Delhi High Court, stating that there is a Supreme Court decision wherein a business activity has been taken a precedence over the ownership. Yeah. Just one second. Huh? Yeah. Thank you so much. Yeah. Thank you. So I think screen is visible now. Yeah, screen is visible.
Yes, yes.
Yeah,
Visible.
thank you.
You can convert this into the slideshow mode.
Yeah. So we are discussing Chennai properties. So the Delhi High Court in 2018, in the case of Anzal Housing again, when this decision of Supreme Court was quoted before the Honorable Delhi High Court, they said that no, in the case of Chennai properties, the main object of the company was to lease the property or the give property on rent. Whereas in your case, since you are a developer, your main object is not to let out the property, and therefore that decision is not applicable. And even in 2018, it upheld its earlier decision, stating that in a case of a stock in trade, also a notional value or annual value of the unsold stock is taxable. Of course, this decision was challenged before the Supreme Court, and it is pending before the Supreme Court as of now. The Supreme Court has admitted the SLP in 2018. Till date, the decision has not been taken, but definitely this has not become a final. Supreme Court is still to decide on this issue. So, because of this subsequent decision of Delhi High Court, considering the Supreme Court decision on Chennai properties, it definitely gave a great ammunition and authority to the income tax officers, and they started making addition in respect of all the cases wherever the stock is unsold and the project is completed or the completion certificate has been received. Okay, and that triggered a amendment, and this amendment, mind you, was introduced to give relief to the real estate sector, to the builder community, and that is what the FM in his speech has also mentioned. Not only speech, but even the explanatory memorandum has very clearly brought out that this is a beneficial provision which has been provided to give relief to the builders. It was originally a relief for 1 year from the end of the year in which the completion is received, and subsequently it was extended to 2 years. So one important thing which we have to understand here, that this was, or this is, a beneficial provision. So what this provision says, that where the property consisting of any building or land appertaining thereto is held as stock in trade, and the property was not let out during the whole or any part of the previous year, the annual value of such property or part of the property for the period of up to 2 years from the end of the financial year in which the certificate of completion of construction is received or obtained shall be taken as nil. So they say that, yeah, this is a beneficial provision. Now, the indirect way of interpreting this would mean that what happens after 2 years? So the logical conclusion which has been taken forward is after 2 years, it will not be nil, but it will be taxable. And that is where our discussion now starts. Okay. So as of now, there are various decisions. So there is one decision of Delhi High Court in 2013 and 2018, which says that stock in trade would be treated as house property for the purpose of Section 22. There are some decisions. I've just quoted one, Neha Builders in the case of Gujarat, which was an old decision, but was not considered by Delhi High Court, and which refers to the same issue, says that no, it is a stock in trade, it will partake the character of stock, which will mean that it is income from business and will not be treated as let out property or deemed to be let out property. Now, I'm just bringing out these two contradicting decisions to make out a point that there is a Bombay High Court decision in an old case of Siemens India, wherein the issue before the Bombay High Court was that what happens if there are two contradicting decisions of non-jurisdictional High Court. Okay. So the Bombay High Court has very clearly said that whenever there's a conflict between different High Court, the AO must follow the decision of the High Court within whose jurisdiction he is, of course. But if the conflict is between the High Court's decisions of non-jurisdictional High Court, he must take the view which is in favor of the SSE and not against him. So this decision specially can be used definitely in Maharashtra, where Bombay High Court jurisdiction is applicable. This is binding, and also can be used by the other state wherever it is applicable, or wherever this interpretation can be used. And also the law goes under the Income Tax Act that whenever there are two views possible, the view which is favorable to the SSE should be implemented or should be used. So this is, so what I'm trying to bring out here is, yes, that is the amendment is one part, is a beneficial provision. There are decisions which says that yes, this is taxable. There are decisions which says that Section 22 is not applicable. Now let's try and understand the real legal provision as it exists as of now on the statute. Now, the most important thing which we should understand is in the case of computation of income from house property, Section 22, as we all know, is a charging section. That is a section which creates the charge. So you have to pass the test of Section 22 if you want to go under the house property. If you don't pass the test of Section 22, the income is not taxable under Section 20, which is the same is the case for salary. It's same the case for business income, Section 45, charge of capital gain, etc. So all these heads of income has a gateway. You have to clear that gateway, charging section, then only the provisions are applicable. Now that Section 22 talks about charging, and there are many decisions. I have just quoted one decision which says that yes, Section 22 is the charging section and it provides for the analysis of this. My point here is that if you note the amendment, as I mentioned here, has been made under Section 23. So the scheme of section is Section 22 is charging section. Once the charge is created, Section 23 talks about computation of annual value. So that is Section 23 is basically a provision which helps you to compute annual value. That if the property is let out, how to compute. If the property is SOP, what is the annual value. If the property is not SOP, not let out, then it is deemed to be let out, how to compute annual value. So in the same series, they have introduced one more section, Section 23, subsection 5, wherein they said that the valuation in the case of a builder having a stock in trade for 2 years, etc., will be nil. Okay. So this is a very important point which I'm trying to make here, which you all should remember. Okay. And understand very importantly is that there is no corresponding amendment made to Section 22. Okay. Point number one, which means that Section 22, as it was applicable in the past, where all these contract decisions were available in favor of the SSE, is still applicable. The amendment to Section 23 is a beneficial provision. Okay, it only talks what will be the annual value for first 2 years. Please, they're very important. It only talks about what will be the annual value of first 2 years. It nowhere says what happens in third, fourth, fifth year if the stock is unsold. Which means if you are in third year, you are not covered under 23 subsection 5. Which means you go back to Section 22 you see the charge is created. Not accordingly, all the decisions of the past which says the stock in trade would be considered, stock in trade would be considered as business asset, or stock in trade would be eligible for vacancy allowance, etc., etc. All these arguments which were available prior to the amendment to section 23 are very well and very validly available to the SSE even post amendment. So I think the perception which generally people have is that after the amendment to section 23 subsection 5, for first 2 year it is exempt, that is annual value is nil, and from third year onward it is taxable, is incorrect. In my humble opinion, it is absolutely incorrect, because section 23 subsection 5 only refers to valuation for 2 years. Third year onwards, you have to again go to start. Okay, what happens in third year? So you have to see whether section 22 is applicable. If applicable, go to 23(1), because your computation will start under 23(1) and not under 23(5), if at all. And then you will have the benefit of vacancy allowances. I can always take an argument saying that a vacancy allowances is, I am eligible for vacancy allowance for the simple reason that I am forced to not, or compelled rather, to not give this property on rent, because if I give this property on rent, I will not be able to sell it. If I give it on rent, how will I sell it? So because this has to be sold by me and it will be held for sale in the normal course of business, I cannot let it out. And because of these compelling circumstances, the property has remained vacant, and therefore I am eligible to claim vacancy allowance. So even though the first argument which I will give is this is stock in trade and therefore this is business activity, and because it is business activity, section 22 is not applicable. First, without prejudice, even assuming that section 22 is applicable, let's, for the sake of argument, let's assume, I would say section 23 may I should be entitled to claim vacancy allowance for the simple reason that I am compelled to not rent this property because of my business compulsion. If I rent the property, I will not be able to sell the property, and therefore I am very well entitled for vacancy allowance. There are many decisions which says that yes, vacancy allowance is available even if the property is vacant throughout the year. And third and final is that Supreme Court, this issue is still pending with Supreme Court. This amendment will not change. Very important point. This amendment will not change the issue before the Supreme Court. The Supreme Court has to decide this issue because this is a beneficial provision only for first 2 years. Third year onwards, the decision of Supreme Court, whenever it will come, would be applicable. So, in my view, if at all, this amendment has to be made as been intended or interpreted by the tax authorities that from third year onwards is taxable, then without making a corresponding amendment to section 22, this cannot be treated as an amendment which implies that third year onwards, all stock in trade held by a builder becomes taxable under section 22. So this is a presentation of on section 23 subsection 5. So 22 and 23 is something which we need to understand: charging section and computation of annual value. We will take all question answers relating to this at the end of the session. Okay. Yeah. Second most interesting and most important amendment, which many a times miss our attention, though this amendment is not exclusively applicable to the real estate sector only, it applies to anybody and everybody. Okay. But I am looking it from, or I am discussing it from the real estate sector because it has a great implication on real estate sector as well. So there is an amendment which was made in 2018 Finance Act with effect from 1920 assessment year. But now, what was this amendment? So before we discuss this amendment, let's go little in past and understand a decision of Supreme Court which triggered some other amendment, which has triggered this amendment. So there is a general principle under Income Tax Act that no one man can have transaction with oneself. I cannot shift money from my one pocket to another pocket and say that there is an income, or the Income Tax Department can't say that your money from bank account 1 has come to bank account 2. So bank account 2 has received income, you pay tax on it. That cannot be the case because the principle is no one man can have income or transaction with oneself. So in past, at some point in time, some SSE converted its stock in trade or its capital asset to stock in trade, and the stock in trade was sold, and conversion from capital asset to stock in trade was treated as non-taxable because of this principle. Then the Supreme Court upheld that yes, you cannot tax this conversion. And to overcome that, an amendment was made under section 45, providing that whenever there is a conversion of capital asset to stock in trade, this will be treated as transfer, and the market value as on the date of conversion would be treated as consideration, and accordingly the capital gain will be computed. One interesting thing and one very logical thing which the legislators, lawmakers did that time was that since there is no third party involved, it is only a transaction with oneself, it would be difficult to pay tax because there is no revenue which has been generated out of this activity, and therefore they postponed the incidence or the payment of tax. So they said that the tax incidence would be triggered in the year of conversion, but the taxability or the liability to pay tax will arise only when the stock is sold. Because unless you sell the stock, you will not receive the money. Unless you don't receive the money, you can't pay the tax. So you can't pay tax on notional income. That's a principle. So they amended the law very categorically with the very pious intention that the tax should be paid only in the year in which the converted asset is sold. If you have not been able to sell that converted asset for 10 years, for 10 years there will be no capital gain tax payable, though the tax liability is determined in a particular year of conversion. Okay. With this background, okay, there was an amendment. Now, there was no corresponding agreement because the reverse way is also possible, that capital asset is converted, stock in trade is converted to capital asset. So people have been doing it, and the courts have held that no, the same decision would apply. Capital asset, for capital asset to stock in trade, there is an amendment. For stock in trade to capital asset, there is no amendment, and therefore there cannot be a tax liability. Now, this issue came up. This issue came up during the era when this long-term capital gain was exempt from tax. So people who were holding it as a stock in trade at some point in time, they have converted that to capital asset, held it for 1 year, 2 year, whatever period, and then they sold it and claimed exemption under Section 1038. Department objected to it that no, it was done only to claim the exemption, otherwise it was taxable at full rate, etc., etc. And the courts have said that no, there is no provision, and therefore this conversion cannot be taxed. Okay. So they came out with an amendment, which and it was required because of course it was creating an imbalance between the two heads of income. So the introduction and the explanation given for this amendment was also to bring in symmetry with Section 45. So they amended the law. What they said, that whenever you will convert stock in trade to capital asset, it will be taxable. Now, how the amendment has been introduced is they introduced Section 28 is a charging section, as Section 22 we discussed. They introduced a clause 6A, which states the fair market value of inventory as on the date on which it is converted into or treated as capital by physical actual activity or by an act or by way of conduct, it can be treated as converted or treated as capital asset determined in the prescribed manner. So what is taxable now? The moment you convert it, the fair value of that inventory becomes your business income. So the implication of this clause, of this two line, is whenever a businessman converts his stock in trade to capital asset, whenever a businessman converts his stock in trade to capital asset, the fair market value of such stock in trade would be treated as business income. And how to determine the fair market value? In the prescribed manner. So they have given the methodology as to how this fair market value has to be considered. Okay. So one important thing I would just add on here for us to understand the difference between the capital asset and stock in trade is, if you see the definition of capital asset, it says that any asset, every asset, movable, immovable, tangible, intangible, everything is capital asset except 1, 2, 3, 4. So the definition of capital asset is all pervasive, all inclusive. It says that anything and everything is capital asset except for the following, and one of the exception is stock in trade. So the moment you say that this particular asset is stock in trade, then that is out of the purview of capital asset. And the moment your conduct shows that you are not treating it as a stock in trade. Now this is very important. I'm repeating, this is very important. The moment your conduct shows that this is not a stock in trade, it becomes capital asset, because it's like heads and tail. Either it's head or it's tail. Okay. So if it is not stock in trade, it is capital asset. And because of this kind of definition of capital asset, it is going to create many unintentional complications, which I am going to discuss. So determination of fair value. So as I mentioned, this conversion of capital stock in trade to capital asset is applicable to all and any kind of stock in trade, be it shares, be it gold, be it building, be it land, be it anything. But we are restricting ourselves to real estate because that's a specific discussion we are having here. So I have reproduced only the valuation rule required for the purpose of real estate. So one of the valuation rules says that being an immobile property, being land or building or both, shall be value adopted or assessed or accessible for the purpose of stamp authority, vagara, vagara. What it means is that your 50C valuation or the stamp duty valuation would be your fair market value, which means if I'm holding a flat as a stock in trade, I say that, okay, I don't want to treat as a stock in trade. I will keep it for my own consumption. So I convert that and I transfer it into investment from my stock in trade. So this transfer or entry itself, there is no registration required, no stamp duty required, nothing, just a book entry or a conduct. So since I am treating that house property as my investment, this section would trigger. What will happen? It says what is taxable is your fair market value. Now the say stamp duty value of that property is, let's say, 2 crore. So that 2 crore becomes business income. That 2 crore becomes business income, which is taxable as per section 28. I have done nothing. The value of that property in my books say must be like 50 lakhs. But today's the stamp duty valuation is say 2 crore. So the difference of 1.5 crore will become my business income. Now, if you read section 28 in isolation, it appears that full 2 crore becomes taxable. But if you go to section 29, 29 very clearly says that the income as per section 28 has to be computed in accordance with the provision of section 30 to section 44. So if you read 28 and 29 together, so definitely the cost of your inventory would be eligible for deduction in computing your profits. Okay. So in our example, 2 crore is the stamp duty value, 50 lakh was my cost. So just by passing an entry in my books, shifting my stock in trade to investment would trigger a huge tax liability of 1.5 crore. Now this is very important, and this is where the whole symmetry becomes asymmetrical. I pass an entry in the books, the income is triggered. Till then, this is okay. But there is no relief available to me in the manner which is available in the section 45. What it provides, that the moment it happens, it becomes your business income and you have to pay the tax. There is no postponement of the payment of tax in the year in which such converted asset is sold. Now, this is something which absolutely is not in sync with section 45 amendment. The introduction very categorically mentioned, if you see the explanatory memorandum, second paragraph, in order to provide symmetrical treatment and discourage the practice by converting inventory to capital asset is proposed the provision, and they have said section 45 of the act inter alia provides that capital gain arising from conversion of it shall be chargeable tax. Now they are taking a clue from section 45 and they say that to create a symmetry, we are making an amendment to section 28. Now the most important protection available in section 45 is the point in time when I have to actually pay the tax, which is the time when the converted asset is actually sold. However, no such protection, surprisingly, no such protection is available under section 28, which means that in our example, if we continue this example, I will have to pay tax on 1.5 crore immediately in the year, even though I have not realized the money, even though I have not received any money, even though I have not transacted with that property, which definitely is something which is unintended, probably, and not or should have been thought about it. The law has been there since last almost 3-4 years, but still now there is no amendment which has been made in this case. So this is going to create many technical issues, especially in the case where the conversion happens because of the conduct. Now see in what circumstances this provision may get triggered. Now this is just my interpretation, and this is how the department can be creative. Department can be creative, getting and can invoke these provisions when it is not intended for. Suppose if I rent the property held as stock in trade, the moment I rent it, it is no more a stock in trade, it becomes a capital asset. The department will say that your act of renting the property has created or resulted into conversion of stock in trade to capital asset. Because if you see the section amendment, it says that converted or treated. So I have treated, they will say that by renting this property, you are treated this as your stock, you are treated this as a capital asset now, which means you are liable to pay tax. If I use my stock in trade office unit as my office unit or my godown, they will say, okay, this was stock in trade. Now you are using at some other asset. So this is not your stock in trade. And this can be, and no one can argue that even the stock office unit is my business purpose, but not a stock in trade. So any asset which is used for business purpose also is a capital asset. If you have an office you are using for your office, and when you sell that office, it is taxable as capital gain, na? So this, they will say, okay, देखो ये stock in trade को आपने office के लिए use किया है, तो अब ये capital asset हो गया. Or as the example I gave, retaining property held as stock in trade as investment, what happens in that case? I withdraw a property for personal use. Many times it happens that the 2 people, 3 people come together, develop a project, and then when they distribute, they say that, okay, I will withdraw the property. Now, this withdrawal of property in a partnership firm, not only the section 45 4A, 5A, section 9 would trigger, even the section 28 4 would trigger. If they convert, or if there is a proprietor, he converts it, or he takes away for personal use by debiting in drawing account, this would be an issue. And the major issue, as I mentioned, is this would have been acceptable if the payment of tax would have been made. A liability to pay the tax would have arisen in the year in which the final asset is sold and not in the year of conversion. And the most important, the valuation rule refers to stamp duty valuation. There is no provision to challenge stamp duty valuation as you have under 50C and 43CA. What happens if the stamp duty valuation is much, much more than the actual real value of that asset because of various issues of encroachment or of maybe inaccessible road or of some litigation, anything and everything can lead, many things can lead to the deterioration in the value of your asset. Now, there is no provision to challenge the stamp duty valuation. I have to compulsory pay tax on the 50C valuation or on the stamp duty valuation without getting the money in the year of conversion. And I have no provision to challenge the stamp duty valuation. So in my view, at least payment of tax should be deferred and there should be a provision to challenge the stamp duty valuation in such cases. So this amendment basically is an asymmetrical amendment, okay, which will create many issues. So this is one of the decision I've just referred here, wherein the SEC has converted his stock in trade to capital asset pre-amendment. And the assessing officer has said that, no, sorry, the courts have said that, okay, the conversion is not taxable and therefore the SEC is entitled to the benefit under section 1038. Now this conversion benefit all will not be available, but these were the implications. However, as the chartered accountants, we are always looking out for opportunities and in the challenges. Okay, so though this is creating unintended tax outgo or tax liability, this may be useful, and I am not suggesting that, but this is the consequences which are also unintended. So, what happens with this amendment? This amendment allows the SEC to create a notional income or a notional loss. Now let's take an example. In my business, I have some business loss of, let's say, 5 crore. And this is the 8th year. This loss is going to lapse. What can I do? I have a real estate, I have a shares, I have gold in as a stock in trade. If I convert, there will be a business income of, let's say, 5 crores. Okay. I convert that. I create a notional business income of 5 crore. I claim this set off. There's no income. I utilize the loss. And this additional 5 crore, mind you, would qualify for deduction in future whenever I'll sell the property. Getting? You can create a legitimate business loss. Suppose if my purchase cost is 150 and the stamp duty valuation is 120. Of course, it is held as stock in trade. I want to create a legitimate business loss for whatever reason. I will just convert it. So conversion would be at 120. My purchase cost is 150. 30 rupees is business loss. Or maybe I want to convert and pay tax. I intend to sell one of my property in future. I don't want to pay tax at 30%, 40%. I want to pay at 20% or I want to invest under 54, 54F. It's a legitimate way of doing it. A. Number two, the same thing may happen. I have a capital loss, which is brought forward, which would lapse otherwise in next 4-5 years. I convert this property to capital asset, then that of course I could have done in the past also, and I can use it to, of course, the unintended benefits or unintended consequences both go hands in hand. So these are some of the downside or some of the other side of this amendment, which would be triggered at some point in time by people who are actually facing these consequences. So one should be mindful. One should be mindful of this provision, especially when any of the entries are passed concerning conversion or any activity done in relation to the stock in trade, which may trigger the provisions. Because once the provisions are triggered, then this becomes, once you file the return, provisions are triggered, assessing officer issues you a notice, then this becomes very, very difficult to reverse it. But having a prior knowledge and prior understanding of this provision, we can ensure that our activities can be planned in such a manner to minimize the impact and implication of this provision. Okay. So here, as I mentioned, the SSC is caught between the devil and deep blue sea. If I don't let the property on rent, if I don't let the property on rent, the amendment says that you will have to pay tax on notional value. If I give the property on rent, if the property is given on rent, section 28 says that, oh, there is a conversion now, please pay tax on the notional value. So this is something which is creating a real imbalance, especially for the real estate sector. And in the times to come, I'm sure this will lead into huge amount of litigation, because these are the interpretation if a person like me, who has a very limited knowledge of tax, can make. The assessing officer, who is actually from that, looks at the things from that perspective, can definitely come out with this creative combination. And once it is used, it will be implemented pan-India level, and this is going to create many, many more litigation. Though the intention of creating or introducing both these sections were to streamline, to provide symmetry, etc., but it doesn't appears to be coming out in the manner in which it was intended. Okay. So what are the reasonable expectation we are asking? That we are saying that, okay, you are saying 45(2) का symmetry है, तो उसको symmetrical दे दो by taxing or by collecting the tax only in the year of transfer. Okay, this will be major thing. Then 50C(2) में जैसे आपको स्टैम्प ड्यूटी वैल्यूएशन को चैलेंज करने का राइट है, वैसा राइट कोई है यहाँ पर भी दे दो वैल्यूएशन रूल्स में. Okay, then there could be an amendment that if a real estate developer rents the property, is stock in trade, then it should not be treated as conversion or something to that effect. An amendment should be made so that the balance is maintained between the two provisions, which otherwise are pulling down the SSC on both ends. Okay, so let's move on. Let's move on to the next discussion: project completion versus percentage completion. So Vimalji had very, very well and very, very succinctly and concisely brought out the entire gamut and discussion on project completion and percentage completion. So of course, I am going to repeat most of the same things, but for the advantage of all the participants, let's go through the presentation or the concept in very, very detail. So as you are all aware that the real estate, that is a developer, is entitled to follow either a project completion method or a percentage completion method of accounting. Project completion is till the project is completed and handed over or the CC is received, completion certificate received, the income is not offered, and then the total income is offered. And because the projects normally takes 2 years, 3 years, 5 years, okay, so the profits are not returned or the income is not offered for tax on a yearly basis. Whereas in the percentage completion method, on a yearly basis, an identification is made or the estimate is made as to the percentage of the project completed and the proposed income is offered for tax. Obviously, the tax authorities would always like to recover tax on percentage completion method, because by deferring tax, we are actually deferring the payment, interest cost, etc., etc. So there has always been a tussle between the tax authorities and the SSC concerning project completion versus percentage completion method of accounting. Okay. Now, in my view, project completion method is a more scientific method as far as real estate sector is concerned as compared to percentage completion method. Some of the points which I could think of is that in the case of project completion, the risk in the property remains with the developer till the OC is received. Suppose if the OC is not received and something happens to the building, there's an earthquake or there's a fire, something happens, the whole responsibility and the liability remains with the developer. And therefore, because the risk has not been transferred completely, okay, the income cannot be offered for tax, or it should not be treated as full sale. Now, in the case of a transaction of advance received from customer, there is no transfer of property till the possession is handed over, as per section 453A also. So even the Transfer Property Act has a very importantly pointed out, as has considered the possession as a nucleus for determining whether there is a transfer or not. Recently under RERA, if the developer fails to give the possession within the agreed time frame or in the manner in which it was agreed, the developer is entitled to refund the entire amount with interest. So this can be also one of the argument to say that how if I pay tax on project completion basis, and in the 4th year the project is not complete for whatever reason, and the RERA orders that I have to refund money to all the customers, and I have to refund the money, what happens to the tax I have paid? I cannot pay the tax till I am certain whether I am going to receive this money or whether I am entitled to retain this money or not. So this can be one of the arguments. Even in the AS 115, a good or service is considered to be transferred when the customer obtains the control. That's a general rule, but yes. And as rightly mentioned by Vimal Bhai also, that there is no accounting standard or there is specific accounting standard or no ICDS which has been introduced till date, which provides that percentage completion method is mandatory or projection completion method is incorrect. So these are some of the rationale which I could think of. There can be many more rationale behind this, but these are the very established rationale for which the various courts consistently has held that for a real estate project completion method is a scientific and accurate method. So now you all must be wondering, ये सब जब सब settled है, तो हमको discussion करने की क्या जरूरत है? When you are saying that this is a settled ratio, as the proposition, there are so many decisions, etc., and nothing against this thing. Why this discussion suddenly is coming up? Now the answer to this question is a recent amendment made in Finance Act 2018. Many amendments were made. All three amendments are concerning Finance Act 2018. Section 43CB was introduced. Now, if you remember, assessment is 1718 onwards, and this was introduced with retrospective effect. Mind you, this amendment has been very few amendment nowadays. Government is introducing with retrospective effect. This is one of the amendment which was introduced with retrospective effect. Now, if you remember, from assessment is 1718 onwards, the concept of ICDS was introduced under section 145A, stating that the income has to be computed in accordance with the ICDS. Okay, to bring in sync with the various different method different people are adopting. So to bring a synchronization in the method in which the income has to be computed, they came out with ICDS 1, 2, 3, 4, 5, 6, various ICDS. The Delhi High Court, if you remember, in Chamber of Tax Consultant, because it was challenged. It was challenged by various assessees in the High Courts, stating that this is non-constitutional because you cannot have an ICDS, notified ICDS, who will overrule the provision of Act, because there are Supreme Court decisions, there are specific amendments in the law. So you cannot have an ICDS which will overrule all these things. And the Delhi High Court very rightly has held that yes, this is incorrect, this is bad in law. Now to regularize this ICDS and to overrule the Delhi High Court decision, and in very subsequent year, an amendment was made to 43CB with retrospective effect. Okay, so various amendment has been made in various sections for various ICDS. So one of the amendment which was made to 43CB was for ICDS 3. What the amendment stated? Amendment stated that the profits and gains arising from construction contract or a contract for providing service shall be determined on the basis of percentage completion method in accordance with the income computation and disclosure standard notified under subsection 2 of section 145, provided that, and they have given. Now, because of this, again, suddenly the discussion started that they are saying that project percentage completion method is final. And even the income tax department started to look at in the way that, yes, there is a sanction now under the section itself, which says that it is only a percentage completion method and it talks about construction contract. And that is why now that this discussion has become relevant and important. So let's see whether this 43CB expands to the developers and the builders. So the term construction and contract has not been defined under the Act. However, it has been defined by ICDS 3. If you read that, it very clearly suggests that construction undertaken by real estate developer is not covered by the definition given of the construction contract. But it talks about a negotiated contract for construction of asset, which means if I have a bungalow or I have a plot of land, I appoint a agency to and ask them to construct a bungalow for me. Okay, we enter into an agreement. He constructs a bungalow for me. That is what is construction contract as per ICDS 3. So first argument is that ICDS 3 itself very categorically gives a definition of what means the construction contract, and the activity done by the developer, real estate developer, builder is not covered by ICDS 3. It is not covered by ICDS 4 also, because ICDS 4 very categorically provides that it doesn't apply to real estate developer. CBDT had clarified, and before this amendment was introduced, a specific question was asked in view of the ICDS. So there is a specific question was asked that since there is no specific scope exclusion for real estate developers and build operate projects from ICDS 4 on revenue recognition, and ICDS 3 or ICDS 4 should be applied by real estate developers. At present, there is no specific ICDS notified for real estate developer. Now, this is the clarification given when all these ICDS were in existence. Okay. Therefore, relevant provision of the Act and ICDS shall apply to this transaction as may be applicable. So even a reference can be made to this to state that ICDS 3 is not applicable to real estate developer. Then there was a tax committee, accounting committee, wherein some reference was made. And the most important thing, that post all this project completion, project percentage completion, the CBDT came out with a draft ICDS on real estate transaction in 2017, 11th May for public comment. Now, this was a specific ICDS introduced for the real estate sector, that is the real estate developer. Now, the said ICDS is exactly in sync with the guidance note for accounting for real estate transaction issued by ICAI, which only permits percentage completion method, because the guidance note issued by the institute had created all this confusion that no, only percentage completion method, as Vimal Bhai has rightly pointed out. Okay. So the said ICDS is in sync. So this white paper is available. If you Google it, this white paper is available on the internet, and you will see this is more or less in sync with the guidance note for accounting for real estate transaction issued by ICAI, which permits only percentage completion method. However, this is still under discussion. This has not been notified. So this also goes to show that the CBDT is well aware of the fact that there are no ICDS, there are no provisions concerning percentage completion or project completion as may be applicable to real estate developers, and they have come out with a specific ICDS which is still under consideration. So even this can be one of the argument to show that still project completion method is applicable despite the amendment made to 43 CB, because that applies only to a construction contractor. So in view of the above discussion, we can safely conclude that the provision of section 43 CB read with ICDS 3 and 4 does not apply to real estate developer. And this is further strengthened by the fact that CBDT has proposed a new ICDS for real estate developer, which is pending for public comments till date. So with this, I finish my session, and thank you very much for all of your patient hearing. And the session is open for the question answers, if any. Charmi, you may please take it over.
Yes, sir. We have a question. An old couple own two builder floors at two distinct places in Delhi. At one floor, they both live, and at another floor, their son and his family resides. So please advise if that another floor house property where son and his family resides will be considered as deemed let out, and old couple will have to pay tax on its annual value given no rent is collected from their son.
So now the concept of house property here is unit wise. So if a floor has only one house property, I assume here in the question that one floor has one flat. So there are two flats. Okay. With the amendment now, up to two flats are allowed as SOP. So both will not be taxable. But to answer this question, let's say there are three floors. The couple lives on the ground floor. first floor one son lives, and on the second floor second son lives. Okay, two property would be covered under SOP, because now the advantage of SOP has been extended from one house property to two house property. But in respect of the third house property, yes, it will be treated as deemed to be let out property. They will have to compute the notional rental value based on section 23 subsection 1.
The next question is tax applicability of JDA.
So the Joint Development Authority for individual and HUF, now there is a specific section under section 43 which provides for the timeline, that is in the year of completion certificate received for the property received, it is the year in which it is taxable. So as far as individual and HUF is concerned, they have specifically provided a provision to defer the tax liability in the year in which the property which is received as a consideration is completed. As regards the other SSEs, the issue is still open, because when the contract is executed under JDA, the power of attorney is given and all the rights are transferred to the developer. So there is still an issue, and it all depends upon the document executed. If all the rights are transferred in the property to the developer, the interpretation is that there is a transfer and therefore the capital gain is triggered. But if there are some clauses which still show that the entire right is not transferred, the right will be transferred only on completion of a particular event. So till the completion of that event, one can say that the transfer is not complete. And if Vimal Bhai can add more to it, because he's an expert on this, if Vimal Bhai, you have to add anything on this burning issue, please oblige us.
नहीं सर, सॉरी मैंने सवाल नहीं सुना सर.
सर वो जेडीए के बारे में सवाल था कि जेडीए का टैक्सेबिलिटी क्या है, तो मैंने मेरा आंसर ये था कि इंडिविजुअल और एचयूएफ के लिए तो अभी सेक्शन 43 में स्पेसिफिक अमेंडमेंट आ गया है,
करेक्ट
तो
सर,
उसका क्लियर हो गया है.
यस सर.
बाकी केसेस में
बाकी का तो नॉर्मल होगा, जैसे
नॉर्मल वही है.
प्लॉट मेरा समझो सर प्लॉट है और बाईदी पे समझो कि मैंने आपको दिया, आप बिल्डर है और मैं पार्टनरशिप फर्म हूँ या कंपनी हूँ या एओपी हूँ, और इफ आई गिवन टू यू, तो लेट अस अज्यूम कि यू विल कंस्ट्रक्ट से 1 लाख स्क्वायर फीट ऑन दैट प्लॉट, एफएसए अवेलेबल इज 1 लाख, 50,000 आप मेरे को वापस दे देंगे, तो मेरा इनडायरेक्टली क्या हुआ, आई गिवन यू 50% ऑफ माई लैंड टू यू, 50% स्टिल ओन बाय मी ओनली, यू आर गोइंग टू कंस्ट्रक्ट ऑन माय 50% लैंड. तो मेरा एक पार्ट हो जाएगा कि 50% लैंड जो मैंने आपको बेचने वाला हूं, व्हाट इज द मार्केट वैल्यू ऑफ दैट लैंड, रेक्टर वैल्यू.
करेक्ट.
और मेरे लैंड पे आप जो कंस्ट्रक्शन करने वाले हैं उसकी व्हाट इज द वैल्यू ऑफ दैट लैंड, दैट कंस्ट्रक्शन कॉस्ट. अब वो कंस्ट्रक्शन कॉस्ट इज नॉट अवेलेबल टुडे, देन यू टू गो एज पर द रेक्टर वैल्यू, व्हाट इज द कंस्ट्रक्शन कॉस्ट.
करेक्ट.
और मैंने को टेंडर लिया है, एस्टिमेट किया है, तो वो टेंडर कॉस्ट आ जाएगा. Whichever is higher on that, I am liable to pay the income tax.
Correct. Yes. And one more point which I just mentioned.
होगा तो आपने बताया करेक्टली कि 45(a) today I don't have to pay anything. Assuming कि मैं इंडिविजुअल हूँ और मैंने आपको दे दिया, for जब लेटर assume कि you will give me 40% of the area and you also given me 20 crore रुपए. Now 20 crore पे भी मेरे को आज टैक्स लगेगा नहीं, 20 crore मेरे पास आएगा, आप TDS काट लेंगे 10%. एंड लेटर से उसी ऑक्यूपेशन सर्टिफिकेट का बॉम्बे में एक्चुअली क्या है, कंप्लेसन लिखा है सेक्शन में, और बॉम्बे में कंप्लेसन कभी आता ही नहीं है, ऑक्यूपेशन आता है, तो ऑक्यूपेशन इज पार विद द कंप्लेसन. तो लेटेस्ट है कि मेरा कंप्लेसन आया 2027 के अंदर, तो 2027 के अंदर मेरे को टैक्स लगेगा व्हेन आई गेट योर 40% ऑफ एरिया. सो उसका 40% का क्या वैल्यू होता है आज के हिसाब से, फॉर्मूला यही रहेगा. उसमें आईटी लोग क्या कर रहे हैं, 2027 का मार्केट वैल्यू पकड़ रहे हैं रेकनर का, दैट अगेन इज रॉन्ग. एक्चुअली रियल में लेना पड़ेगा, फॉर्मूला यही होगा कंस्ट्रक्शन कॉस्ट. तो वो दिन आपको कंस्ट्रक्शन कॉस्ट मालूम हो गया, 50% लैंड का वैल्यू मालूम हो गया, विच एवर हायर उसके ऊपर लग जाएगा, और 20 करोड़ भी उसी टाइम में ऐड होगा. Whatever TDS is there, that will be carried forward, and that also adjusted in 2027.
Perfect, correct sir. And एक और point, sir, एक और point इसमें मैंने mention किया था. I want your comment also for the advantage of all the participants. Is that if the JDA is developed or is executed in a manner wherein there are certain clauses which provides that the only on happening of certain event the entire rights will be transferred to you. In that case, the tax liability may be postponed to that happening of that event. So that is something which many of the people plan and incorporate in the agreement to defer the tax liability to a particular point in time.
So 2 points are very very important. If you give right to sell, let us assume कि आप बिल्डर है, मैं लैंडलॉर्ड हूँ, मेरी जमीन आपको मैंने दे दी. The moment I say, and I'm not individual or HUF, individual HUF का क्वेश्चन बहुत क्लियर हो गया. I am partnership firm, and if I give you right to you to sell the property or mortgage the property, Then under section 247, I parted with the possession. And
Correct.
section 53A of transfer of property के act के हिसाब से मेरे को tax लग जाएगा.
Correct.
But if I restricted you, कि sir, you cannot sell this proper flat till IOD or commencement certificate or this or that, तो वो time में मेरा tax postponed हो जाएगा.
Yes, exactly.
Yes, sir.
Thank you, sir. Thank you so much.
Thank you, sir. Thank you.
Yes, Charmi.
The next question is, can builder of apartment opt for 44 AD of Income Tax Act if project is of 3 years?
44 AD.
Yes.
Now, technically, if it's a business income and turnover is less than 2 crore or 10 crore, it's applicable. But one important thing which I would like to point out here, very important, is 44 AD doesn't mean that you offer only 8% and you are free to do anything. What you have to offer is actually your real income. What people say, and I have earned 100 rupees, I pay tax on 8 rupees, but that 98 rupees is still lying in my bank account. And I'm paying tax on 8. That is not how it works. So even if you go under 44 AD, it is only giving you a relief from maintenance of records, from asking a specific question as to kindly explain why this is a business expenditure, etc. And nothing more or nothing less. There is no specific, I would say that exclusion for real estate as it there for the commission agent or something. So one can claim it, but it should be the real profit. And it should be within that 44 AD and all these compliances. जो 3 साल या 5 years तक होना चाहिए, etc. You should be able to comply with that. But I don't see any specific prohibition under the law.
Okay, sir. Thank you. The next question is, what is the turnover of construction of a building?
What is this question?
What will be the turnover for construction of a building?
Sale value. That is very
That's all.
difficult, yeah.
So that's all from the question side from the participants. Thank you so much, sir, for being a ray of sunshine in this topic and enlightening the participants on the topic. Thank you so much, sir.
Thank you. My pleasure. Thank you so much. Thank you all. Thank you, the participants, for your patient hearing.
Just stop sharing, Pankaj ji. Stop
Sure.
sharing.
I'm doing that right away.
So moving forward to our session, last but not the least, we have our next speaker, CA Mukesh Ladha, sir, who will throw light on the topic implication of GST in real estate sector. To formally introduce him, he is a chartered accountant with 15 plus years of experience in the area of indirect taxation accounts, costing, budgeting, audit, commercials, contract drafting, system implementation, etc. He is a insolvency professional and fraud auditor. He's a member of Confederation of Indian Industry National Tax Committee 2018-19. He has an in-depth knowledge of GST and central and state indirect tax like excise, service tax, custom, VAT, CST, works contracts, sales tax, etc. He has experience in handling litigation, drafting, replying of appeals, interfacing, licensing with department officials and council advocates. He has a partnership with DMKH and Company heading office at Gandhinagar and special advisory services system. He has also experience in internal control, including IT system, ERP gap analysis, fraud investigation, and credit rating enhancement and regulatory investigation for regulatory risk, regulatory interpretation, and compliance security laws. With this brief introduction, I request CA Mukesh Ladha, sir, to share his insights with our participants. Over to you, sir.
Thank you, Charmi. I am audible?
Yes, sir.
Okay. Respected CCM Durgesh ji, Punya Sahab, Pankaj ji, Nishi, and participants. It's my pleasure to share my views today on specifically on real estates. The changing in there are various changes in the laws, various impacts in the real estates, various new notifications, how this is impacting, whether it is an investment or being a buyer, how it's going to impact my pocket. I'll try to, although 45-50 minutes is not justifiable to this topic, but I'll try to cover the maximum which I can do. I'm sharing my screen. Nishi, just let me know if it is visible or not.
Yes, sir, it's visible.
Okay.
Sir, please start with the slideshow.
Yeah, I'm doing this, please. Just a minute. If you talk about GST on the real estate, it's a long way story before 2017 when the real estate sector was actually having a lot of litigation in terms of service tax as well as sales tax. Moving from builder association case on works contractors where it was allowed to charge works contract on the builders. It was also major revenue for states, and the approximate cost on the builders is moving from 18 to 30% because the various tax rates are different in the sales tax and service tax board. So after post 1st July 17, I will again demarcate prior to 31st March 19 and after 31st 19. The 31st March 19 also being a milestone where lot of changes has been implemented for real sectors for streamlining and giving relief to various buyers. We can majorly divide real sectors in terms of GST. If being a promoter, how it is I'm going to deliver, being a service provider for works contract, if I be a labor contract, then how it would be, and for especially joint developments, how it is going to impact. So there are so many issues still unresolved, but let's see one by one how we can address these. In terms of taxability, whether it is residential, commercial, residential come commercial, there's a different type of impact in all these three sectors. So we'll try to touch all these 3 points. Now we talk about the issues. Now issues, whether it is renting, I'm going to take a rent on the I would say plotting also. I'm giving the leasing of the vacant plot. I'm giving the leasing after developments. I'm developing the plot and then selling. I'm developing commercial areas. I'm developing residential. I'm developing residential and commercial both. So there are different impacts. So as far as the construction per se, it is a deemed service in terms of GST. Otherwise, for land, it is neither service nor goods. So, as per Schedule 2, constructions of complex and building and civil structure, it's brought into the works contract and as deeming provision the supply of services. Whereas, as per land, as per Schedule 3, selling of land is not qualify as a supply under GST provisions. Now, when the time of supply, if we talk about, so what is the time of supply, up to what period the GST would be leviable, and after which period GST is not leviable. So if we say once the OC, or I would say occupancy certificate, is being issued by a competent authority, or possession has been started, if the OC is not being issued after a reasonable time, after giving a reasonable time to authorities, then it is treated as a immovable property, and after that no service tax is applicable if I sell any real estate property. So I'm again telling that bifurcating prior to 1st April 19 and after 1st April 19, there are sea change in terms of GST implication on real estate. In terms of taking of input credit, in terms of taxability and the reverse charge for certain transactions, in terms of FSI and joint development, in terms of upfront amount, salami and all, we'll discuss one by one. This is a scenario which in short I am representing that in a real estate projects, what are the options available for a service provider? What type of transaction can be happen? So after 1st April 19, for a specific segment of people, there is a clear demarcation affordable residential apartment. The definition of affordable residential apartment is given that 3 conditions to attest to this. One is monetary condition, that is 45 lakhs. Up to 45 lakhs, the affordable residential property comes into that. Then there are 2 conditions for metropolitan cities and non-metropolitan cities. For metropolitan city, the carpet area should not be exceeding the 60 square feet. In other case, it is 90 square feet. And to give a growth to the real estate projects, that is specific rate has been announced. That will be maximum 1% without availment of any credit. So for this particular segment, the real estate for only for residential project, I would say that 1% GST is being announced without availment of any credit. Other than this, there is a non-affordable residential apartment where there are purely, I would say, purely residential projects. In that case, when the monetary limit and carpet area is not applicable, it comes under this. In that case, 5% GST without availment of ITC. And residential real estate project, that is also partly commercial, where maximum 15% can be a commercial part and 85% will be residential carpet area. In that case, also the 5% GST rate has been specified. In all other real estate sectors, the rate of tax would be 12%. Now, this rate has been specified, treating that there is a transfer of the joint land also. So, undividable land ratio also being transferred along with the transactions of real estate, then this rate will be applicable. Otherwise, if it is purely construction, then treating that land cost 1/3 of the total cost, then the rate will be changed. Then it will come under works contract services. An example, if it is a non-RRAP project, it will become under 18%. So this is the bifurcation prior to 1st April 19 and after 1st April 19, what was the scenario? The all date effective was 8% as against 1% for affordable, 5% against 12%, 12% against 5% against 12% for commercials, and other commercial also 12%. Now, what would be happen of all the ongoing projects which are continue as on 31st March 19? So government has given an option whether he want to continue in the old scheme or whether he want to switch over in the new scheme. So for switching over, they need to mandatorily give a declaration if they don't want to switch over. Otherwise, automatically it will consider that it will come into the new scheme. Then coming into new scheme, they need to do credit adjustment. What they have availed earlier, they need to reverse. The credit has to be reversed from cash. So there are certain requirements under the input tax credit and coming into the new scheme. So promoters they don't submit any declaration. Then even in that case, it will understood that the new scheme will be applicable. Now earlier 18%, now 12% would be there. When the credit is not available, they need to reverse the credit because if they're coming to 12% to 5%, so this requirement under the law for input tax reduction has to be followed. Now, there is a very specific requirement. Once the credit is not available, to block the leakage of the input tax credit and to block the revenue leakage, government has specifically bound to the real estate promoter that cement cannot be bought from unregistered dealer. There are 2 requirements under the new scheme. First, the 80% of the procurement has to be from the registered dealer. If the 80% of the procurement is not from the registered dealers, they require to make an 80% by making the payment of GST under reverse charge mechanism and to keep 80% from registered dealer. specifically cement, whether they are exceeding more than 80%, even in that case, they are required to pay if they are purchasing cement from an unregistered dealer, the 28% asking would be applicable. Other than this, what is the includable or not includable? There are certain criteria. What is the 80% of what it count, what does not count. Specifically, capital goods also they cannot procure from an unregistered dealer. So to maintain the GST chain in the real estate scenario, in the real estate projects, 80% transactions from B2B is required to be implemented. Now the requirement, other requirement is to keep the so that the siphoning or transferable of the GST from one project to another project cannot happen because there is restrictions on the availment of credit. So the accounts required to maintain on each project wise separately. The contract and subcontract concept here also there, and but there is no concessional rate of GST is applicable on subcontractor. So in case of affordable apartment, there would be 12%, otherwise 18% would be there. So there cannot be planning that if I given any subcontractor contract and by availment of 100% credit to subcontractor, they are also required to be billed 18% to the main contractor. In terms of ITC reversal, so when they are coming into new project from new scheme to from 1st April 19, to keep the full rate 18%, 12%, otherwise they are not into them, they are required to be reversal of credit in terms of apartment is remaining unsold. So if I'm into 12% scenario, ITC is eligible in 12% scenario case, but after coming or any flat is sold after OC, the proportionate credit is required to be reversed once OC is received, and all the unsold flats, proportionate credit is required to be reversed. Now, what happened being a second seller, if I also sell a flat under a new project scheme, or I bought a flat and then I want to sell it, so whether GST is applicable or not applicable, as such, there is no exemption has been given. If the sale price is more than 20 lakhs, then I may possibly department may ask me to take a registration and ask me to pay GST on this. As of now, there is no clarification on this part. There was a recent issue for earlier there was a doubt that if I cancel the deal or the builder is not able to give me the possession within the definite time, and after cancelling, whether whatever amount I have paid to builder, whether any GST which paid on that amount is available for refund or not. So the mechanism has been suggested, and the cancellation where there was no contractual agreement of cancellation. We will read in detail in next slides. In that case, such cancellation would eligible to get refund on the GST, and the mechanism has been suggested. If the cancellation has been made up to a certain period, and I would say for this year, whatever amount I paid, and the limit of the issue of credit note is available to the builder will give you the refund. Otherwise, the refund can be claimed directly from the government, and there is a specific mechanism available to this. This is very ancillary services, I would say, and there are a lot of options that are available in real estates. When I'm going to buy a plot or when I'm going to buy a residential premises. For example, for garden facing, for having additional parking, for having another amenities, if there are additional charges have been charged by the builders, what would happen on the additional charge? Similarly, from the prime locations or I would say corner plot, anything, if I'm paying the extra, what would happen to this extra amount? This we will discuss in this scenario. So if I'm paying any additional charges to once I'm buying in a residential or commercial project, it is being a part of composite supply, and whatever tax that is applicable on the principal supply, the same tax will be applicable. In terms of land, we'll discuss in later and next slide. So in terms of value of land, there are a lot of issues going on. There are a lot of advanced ruling, favorable, non-favorable. In that case, what would happen whether a raw land is being purchased, whether in developed land is purchased, whether GST is applicable or not applicable. As per Schedule 3, land is out of GST net. It's coming under import property. So if any developed land is sold, there are a lot of advanced ruling was that they concluded that GST would be applicable, but not a simple land. There is recent clarification from the government side. There are 3 circulars in this regard: 177, 178, 179, which has been clarified whether it is developed land or it is a raw land. Ultimately, the supply does not changing the nature. The transaction will not change the nature, and the GST will not be applicable. Now we come under the which is area of I would say high litigations in terms of JD arrangements. Now JD arrangement being done, there are 2-3 type of arrangements are available in the market based on the what it suits to the landlord and the contractor. In one way, I'm giving my land, and then I'm hiring a contractor to provide me services for a construction services. Then what is the tax implication under this arrangement? I'm giving land to a promoter or a developer. In that case, in return, he is giving me a constructed or some of the quantified flats which I am free to sell in the market. Then what would the valuable and what the tax implication on such a JDA? We jointly make a partnership and we transfer this land into partnership firm, and then we construct and then jointly sell the flats or commercial property. Then what will happen to these arrangements? So there are different type of strategy being adopted. In terms of residential project, the JDA taxability, I would say, in all these arrangements that prior to 1st April 19, after 1st April 19, earlier the JDA, GST on the JDA was on the forward charge. From 1st April 19, the tax on the or GST on the JDA will come under reverse charge mechanism. Now, what is the quantum? What is the valuation? It's a long topic, but still I would try to cover. Once, in terms of I would say residential project, we can say it is applicable, and there is no JDA, there is no tax is required to made on the JDA part. Once I started to sell on the unsold property. So how it is impacting and what is the strategy we made for the JDA tax strategy? We need to have a specific scenario, and then we require to discuss. So landowner transfer development right to promoters. In some case, landowner has revenue sharing arrangement with promoters. In that case, promoter is liable to pay GST on the entire supply of apartment. In some cases, landlord, owner, the promoter allotted some apartment. In that case, area sharing basis, open market value. Based on the open market value, the value will be decided, and then is required to pay under reverse charge mechanism. And then the AOP we already discussed. So how that RCM would be applicable? So for the promoters who is actually developing the project, the RCM is required, and the tax on the JDA is required to pay under RCM after 31st March 19, and the tax rate will be 18%, and it is available for credit. For the residential prospect, the GST is not applicable on TDR, FSA on payment of upfront amount if residential apartment is sold before completion. So if all the residential apartment being sold before OC, there is no tax implication. But if any unsold, it is being treated that all the tax is already inbuilt in the sale part, so there is no tax on implication on the JDA. But if any unsold property is there on the market value of unsold property, the promoter is required to pay under RC. In terms of commercial apartment, GST is payable on development rights and after the transfer on payment of upfront on long-term lease basis after 1st April 19. Whether now the specific case is whether or not the commercial apartment are sold before obtaining OC, the tax is payable by promoter under RC. So the in case of residential, we can say it will be exempted unless all the units are being sold prior to OC. Only unsold OC is required to be under RC. In case of commercial apartments, there is no such exemption and we need to pay make the payment irrespective of whether OC is received or not, all the sold or not. We discussed about the residential apartment sold before the completion. The specific formula is also there how to derive the tax component on this. Now, if a service provider or the construction service promoter to landowner, so valuation in what is the value in terms of valuation of construction service promoter to landowner? So if a developer is actually giving services to landowner, how the JD will work? When a registered person transfer development right to a promoter against consideration wholly or partly in terms of form of construction apartment, the value of construction service in respect of such apartment shall be deemed to be equal to amount charged for similar apartment near to the transactions, independent buyer. So near to that on such development right being transferred. Valuation development right from landlord to promoter and vice versa case, what will happen? In that case, the value will be the value of similar apartment charged by the promoter from the independent buyer nearest to the date on which such development right and affecting transfer to the promoters. The tax liability will arise when the date of completion of first OC. So in case of residential, whatever unsold units are there, I need to pay tax on JDA on RCM basis. Now, valuation issue, what are the issues are there? What is the open market value? What is the nearest time value? So these are the cases where individual cases needs to be justified what value I need to be or someone need to take, which is applicable on the unsold units. So these are the cases or I would say justifications or difference of what it was prior to 1st April 19 and what it is after 1st April 19 and what is the tax scenario has to be made. So these are the scenario I have tried to demonstrate, but due to lack of time, it cannot be taken on individual or one-to-one basis. So the same has been included by the PPT. So there are different scenario and what is the mechanism, what type of transactions we adopted between the landlord and the promoters. Based on this, what will be the tax liability and what is the time of tax liability. The same has been demonstrated. Now we'll touch about the specific issues which actually clarified in the circular number 177, 178, and 179. Now we have discussed that any additional charges in terms of locations when it is for land. There are several advanced ruling which we actually clarified and which also confirmed that some of the advanced ruling is in the favor that there is no tax applicable on the land which is developed and with the amenities, different type of amenities, and a tax implication when it is raw land. So the specific clarification has been given that upfront amount is called salami cost or development charges or any other name payable in the respect of such by giving granting of long-term lease. This is for the long-term lease. Industrial plots or plots for development of infrastructure for financial business provided by the state government industrial development corporation undertaking or for this having 20% or more ownership of this, allowing the choice of location of plot in the integral part of supply of long-term lease of plot, and therefore location charge is nothing but part of consideration charge for long-term lease of plot being charged upfront along with this. Accordingly, as per recommendation of GST Council, it is clarified that location charge or preferential location charge paid upfront in addition to the lease premium for long-term lease or land constitute part of upfront amount charged for long-term lease of land and are eligible for same tax treatment. This is the case where I have taken the land on lease basis, and for the lease, if any specific location is preferential location, I am paying extra charges, then the GST is required to pay on this lease transactions. But if I am purchasing the land, what would happen for this in terms of that? The board has clarified that, example, land may be sold either for the prime location or after some development, leveling, laying down of drainage lines, water lines, electric lines. For all these scenario, it is clarified that the sale of such developed land is also sale of land and is covered by serial number 5 of Schedule 3 of CGST Act and accordingly does not attract CGST. So, if I am taking a land on lease and if I am purchasing a developed plot where amenities are there, if I am taking a lease, then all these additional cost will be part of my GST cost and GST is leviable. But if I'm purchasing, then I'm purchasing a land and the GST would not be applicable for any system of additional charges in terms of prime location, in terms of development of amenities. So here also, if there is JDA, what would happen? The JDA for the residential project, JDA for the land development. For the land development also, if I'm an owner, I can have a agreement with the developer that for leveling, for creating any amenities, all these. So what would happen for GST all on these services? So GST on the JDA will be exempted for the already sold amenity units, and only unsold units will be applicable for RC. Such type of notification setup clarification is not available for plots. In that case, whether the GST would be applicable for the land developer or not for this JDA, any GST is applicable or not, the GST between the developer and the services provided for development to the land, for the land to the landowner, whether GST is applicable or not. As of now, the principal transaction is exempted, but the services between the developer and the landlord is not exempted. So we can say department can argue and GST is applicable. So transfer of developments are by landowner under a joint development agreement. If it is sold as a land, there is no GST. But from the developer to landowner, whatever services are there, GST is applicable. Now, the builder is not able to give me the possession. For that, any compensation has been given to me, whether in the form of liquidated damage, whether in the form of compensation, whether in the form of penalty, whether it is in the form of breach of contract, whether GST is applicable or not. There are, again, on this point also, there are various advanced ruling, and different advanced ruling has given different judgment, and there was a lot of confusions are going on. The circular, as per circular number 178, the board has clarified that there was no contractual agreement for such compensation and penalty. It was given because of breach of contract. So all these amount where there is no contractual agreement per se, GST is not applicable. So it is transaction without GST, and it comes under Schedule 3. But whereas this cancellation charges is being given as a facilitation. I'm giving an example of IRCTC where railway is given options to give it, or airlines giving me an option to cancel, or hotel is giving me an option to cancel before some time, and they're charging some cancellation fee. There was some contractual terms and there was a facilitation for cancellation. In that case, GST is applicable. But when it is recovered as a penalty or as a liquidation damage, there's no GST is applicable. So this is the cancellation charges, and for the cancellation, if against my commercial property, against my residential units, if any deal is being cancelled, what would happen to the that GST component which already paid? So that mechanism has been announced under the circular, and that mechanism available. I need to apply if this is after the certain period where credit note cannot be issued, then I need to apply being a casual dealer, and then after giving the justifications and the documentation that I have paid the GST, the refund will be given by the government agencies. We can cover the questions answer now. Rishi. Rishi,
Yes, sir. I'll ask Charmi to take over.
please.
Yes, sir. 1 second. One of the question is, with Gujarat Legal Authority judgment, is it crystal clear now that GST is liable only on the construction cost of existing and free area offered to member in redevelopment of society's property?
The clarifications with this circular. If now the transaction is purely for this applicable is there when the transaction is purely for land, or it is a development of projects. If it is in the form of JDA, GST would be applicable being RP or REP or RREP. Otherwise, GST would not be applicable.
Okay, sir. The next question is, developing agricultural land into plot is fully exempt under GST.
Yes.
So, so what is the turnover in completion method or work progress method?
In both the case, GST is not going to be impacted. It's only for your project accounting or accounting treatment, but that will not affect applicability of GST.
The next question is GST 5% without ITC is compulsory for real estate as per GST Act?
5%. Yes, for residential project, I would say there is no option has been given for with ITC. Although, if it is without land, then it's come under work contract, and in that case, if it is a work contract scenario, then a trade can be available. So, in terms of residential product, I would say it is compulsory right now.
So we also have with us our vice chairman of the committee of CMIP. Welcome, sir. But before that, the last one question which sir needs to answer is GST implement plots. What are the effects of GST implementation on land converting to plots?
Sorry.
What are the GST implementation in case where land is converted into a plot?
So in that case, as of now, after the circular number 177, 178, if I'm only converting plots into small land or otherwise, or I'm selling it is as a land, even with some amenities, and the transaction per se is a parcel of land only, there is no GST implication, GST is not applicable.
That's all from the question side from our participants. So, do you want to take any more topic, or we'll end the session?
No, it is okay, because the different scenario for JDA, it's very less time to discuss there what type of implication will be there in terms of JDA and when the tax liability will be there. The pertinent point is that in after this 3-4 clarification, that whether the refund would be available when I have paid against the cancellation of my deal, whether GST would be 5%, 12%, or 18%. There are 3 options are given. 1% is for affordable, and for all non-affordable, if the commercial space is up to 15%, 5% would be there. But if I want to avail the credit and it is a commercial project, then 12% is applicable when the land is also being part of my deal. So undivided land is there. Otherwise, there is no undivided land. It would come under worst context sales, and 18% would be there. Specifically, the issues which pertains to the sale of land with amenities after development, so there is a crystal clear that as of now, there is no tax implication when I'm selling per se in the form of land only. Although there is a famous judgment in terms of Odisha High Court, where after creating amenities, in example, I'm creating a park and facilities for the industrial development, then I'm renting. The matter is before Honorable Supreme Court. The Honorable High Court of Odisha has allowed credit in that case also, when per se there is a recycling of revenue by renting of business, but it is not being accepted by department.
So, thank you so much, sir, for your insights. But as we are coming to the end of the session, we are fortunate enough to have the presence of CA Rohit Ruwatia, sir, Vice Chairman of our committee, that is CMIB committee, for his concluding remark and vote of thanks. But before I hand over the proceedings to sir, formally introducing him, he's a fellow member of Institute of Chartered Accountants of India and a Central Council member of the 25th Council of ICAI. He's the only chartered accountant who is elected as the youngest branch committee members, then region council member, and then the youngest central council member of ICAI in the history. He's the founder of professional social organization Vita Samiti, that is VSS.
It's sufficient. Yeah.
Over to you.
Yeah, thank you, Charmi. Respected Durgesh Kabra ji, the chairman of the committee, today's speaker Mukesh ji, Vimal ji, and the committee officer Nishi ji, and all the dear members who have attended today's seminar, a very good afternoon to all. It's indeed a great pleasure for all of us that we have started this initiative under the able leadership of Durgesh Kabra ji under this committee, and this is the first seminar related to the industry specific area, and this time we have done in real estate sector. So hope all my dear members have gathered certain information which will be helpful for them in understanding the various critical nitty-gritties of the real estate area. We at the CMIB committee are continuously putting our efforts hard in making new development in the area of CMIB for members in industry and business. So this is a welcome step. I must congratulate my chairman Durgesh Kabra ji, who worked day and night for the committee, for the members in industry. And I'm fortunate to work under him as vice chairman in the committee. We look forward for many other events in the line in the time to come. And probably we are planning every fortnight or every week such kind of sessions which may be helpful for our members in industry. And here I would like to apprise that yes, we are working hard in the campus placement also. Recently we have organized 2 HR meet in Mumbai and Delhi, and then in Kolkata also. and now we are going ahead with certain developments. And we expect that more of the companies come in the campus participation, and none of the chartered accountants who qualify in the recent times get unemployed. So everybody, we are looking forward that every chartered accountant who qualify get an employment in the best suitable organization in the country. We look forward many other activities and support from every members in industry and suggestions from every members in industry. Whatever they wish to suggest to the committee, we assure that we will certainly participate. We will certainly include their suggestions in our agenda and discuss in the committee and come forward to put some suggestions and solutions and work accordingly. So thank you once again for organizing such kind of event and for your valuable participation. Thank you very much.
Thank you, Rohit sir, for your time and valuable insights for our committee. With this, we conclude the session, promising that the committee will strive best for the members in industry and bring more knowledge.
Thank you all. Thank you.
Thank you.